by Bloomberg, but revisions might need to be made to this chart if we see further mass walkouts taking place across public sector industries such as teaching, civil servants, NHS workers, and the General Secretary of the RMT has even called for a nationwide strike, Tom, the last time we saw a strike of that scale back in 1926.
Potentially a summer of misery. £100 million hit, as you say, Bloomberg's Laura Wright on that rail chaos hitting the UK this morning. Coming up, VinFast CEO Le Thi Tu Tui at the Qatar Economic Forum on her plans for the EV market. Stay with us. This is Bloomberg. At the Qatar.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open. We are 30 minutes into your European trading day, and here are your top stories. Elon Musk says he thinks a recession in the near term is more likely than not. Speaking to Bloomberg earlier this hour, the Tesla and SpaceX CEO also said he wants 80% of North America and half the world on Twitter. President Biden says a US recession is entirely avoidable. Despite dire warnings from Goldman Sachs, ECB President Madame Lagarde restates plans for consecutive rate rises. Stock futures and treasury yields rise. Plus, rail workers go on strike. UK commuters brace for the largest rail walkout in 3 decades as the nation's trains grind to a screeching halt. Let's check in on those markets then. You're seeing pretty decent gains across the European space of around 0.9%, building on the modest optimism that filtered through those equity markets here in Europe yesterday. Of course, it was a national holiday stateside. Here's how things are breaking down then 0.9% gains across the benchmark, almost 1% gain for the DAX, 130 points built on top of the DAX. The FTSE 100 faring slightly less well compared to some of its European counterparts, getting 0.4%. And we can switch on and see how things are breaking down sector by sector. We talked about those recession risks, President Biden saying that a recession is avoidable. We heard, of course, from Elon Musk and his views on the likelihood of a recession. And then Goldman Sachs raising their likelihood now to 30% in terms of the chances of a recession over the next year versus 15% previously. JP Morgan, meanwhile, saying that the equity situation could ease in the second half of the year. So that debate still, of course, fast and furious around the likelihood of a recession. Meanwhile, over at the ECB, Madame Lagarde giving testimony to Parliament and reiterating that July and September are certainly live in terms of those rate increases, but also signalling that market tensions are not going to derail those plans, and focused more on the question of wages and starting to see a bit of wage price increase across the Eurozone. So in terms of the sectors, you're seeing gains pronounced across chemicals, consumer basic resources, two sectors in the red as things stand, personal consumption and utilities down 0.4%. Let's get back then to that interview with Elon Musk, the CEO, of course, of SpaceX and Tesla. A wide-ranging conversation on everything from US politics to Twitter and China's competition in the EV space. Here are some of the highlights.
With respect to the Twitter transaction, there's a limit to what I can say publicly, given that it is somewhat of a sensitive matter. So I will have to be measured in my responses here, such as not to generate incremental lawsuits. Unfortunately,
that seems to be a risk you sometimes manage to overcome.
Yes, a deposition minimization is, I think, important.
Have Twitter given you enough information?
Well, there are still a few unresolved matters. You've probably read about the question as to whether the number of fake and spam users on the system is less than 5%, as Twitter claims, which I think is probably not most people's experience when using Twitter. So we're still awaiting resolution on that matter, and that is a very significant matter. So we're awaiting resolution on that. And then, of course, there is the question of will the debt portion of the round come together, and then will the shareholders vote in favor? So I think those are the three things that stand in the that need to be resolved before the transaction can complete.
What about the general state of the economy? Does that weigh on you when you think about this? I mean, you just described it. You have a super bad feeling about the economy. Are you still in that position? I just said to you earlier, Joe Biden has just come out and said that a recession in America is not inevitable. How do you feel about the economy?
Well, I think a recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not. And what do you think?
I'm with you. I agree with you. I think it's more likely. Can I ask you one particular thing to do with the Twitter bid, which is, you are one of the biggest and fastest growing investors in China. Tesla, you've talked about it being a third of your sales going forward. You're now buying Twitter, the kind of public forum for free speech. The Chinese historically don't tend to be very enthusiastic about free speech. Are you worried about whether you can keep those two particular horses running? Is buying Twitter going to get you in trouble with the Chinese?
Well, Twitter does not operate in China. Yes. So, and I think China does not attempt to interfere with the free speech of the press in the U.S. As far as I know, because I assume you're not under pressure at Bloomberg from China. So I think there's. I don't think this is going to be an issue.
And in terms generally of that issue of freedom of speech and Twitter, you've talked about Twitter making it even freer and letting more people onto it. Is there a limit at all to who you think should be allowed onto Twitter?
Well, my aspiration for Twitter, or in general for the digital town square, would be that it is as inclusive, in the broadest sense of the word, as possible. That it is an appealing system to use. So, I mean, ideally, I'd like to get like 80% of, let's say, North America, and perhaps, I don't know, half the world or something, ultimately on Twitter in one form or another. And that means it must be something that is appealing to people. It obviously cannot be a place where they feel uncomfortable or harassed, or they'll simply not use it.
Okay, the CEO of Tesla, of course, Elon Musk, speaking to Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum just a short time ago. And of course, Tesla is not the only challenger to the automotive sector. Vietnam's VinFast is the first car maker from emerging markets to expand into global markets with its range of electric cars and electric scooters. For more, let's go to Bloomberg's Haslinda Armin at the Qatar Economic Forum in Doha. Haslinda.
Well, Tom, this is one company that is investing billions of dollars in an EV plant in North Carolina, prompting President Biden to say, you know what, it's going to create 7,000 jobs. Let's get insights, perspective from VinFast CEO Lati Tutui. Tui, good to have you with us. I mean, is the plan on track? We know that you've said before that production will start in 2024, but of course the world is a different world today. Is your plan on track?
Yes, we are still on track to start the production in July 2024. We are in the process of getting construction permit, and we expect to break the ground by the end of the summer, maybe like September or so. So
you've not been derailed in any way at all by supply chain disruptions, by expectations of a slowdown in the global economy?
We haven't slowed down. Yeah, every time there's challenges, I think it's better for us. So.
Of course, there are also plans to produce about 700,000 to 1 million EVs in the U.S. in 5 to 6 years. Some say that's very ambitious. You say?
I think it's achievable. Not in the U.S., but globally, between our plants in Vietnam and in the U.S. But we think that it's achievable.
What's driving that optimism?
I think the demand for EVs is increasing. I think Bloomberg New Economic Forum in November almost doubled the forecast for plug-in passenger cars to 26 million by 2025 instead of 14 million the year before that. So there's a demand. We see it every day in all the sector, either not only passenger car but also electric buses or e-scooter. So we get inbound inquiries from all over the world. So I think there's a high demand for electric vehicles.
Of course, the plan is to be a global player. You want to sell EVs to countries including Germany. What are some of the challenges in becoming a global EV player?
There are many challenges. Obviously, first of all, VinFast is still a no-name brand, so we need people need to get to know about VinFast first. There are challenges about battery technologies and global market challenges as a whole. But we also see a lot of opportunities in this market. I mean, moving to EV is an inevitable trend, and we are in the forefront of the movement, and we need to take advantage of the opportunity. So I think we have many advantages that can allow us to make it happen.
Of course, we've just spoken to Elon Musk here at the Qatar Economic Forum. I'm just wondering, how does VinFast think it can compete with the likes of Tesla? What is the strategy?
We never started out trying to compete with the EV companies. I mean, our strategy is very different. We want to compete and replace the internal combustion engine vehicle. So if you look at our pricing, it's exactly how an internal combustion engine vehicle is being priced, from the upfront cost to the monthly payment for battery leasing with the innovative battery leasing model that we are using. So the way that we're looking at it is we are out there to provide EVs to the mass market with our range from the A segment to E segment. We have everything for everybody. So that's our strategy. We're not out there to compete with the EV companies.
Your EV plant in North Carolina, you're also looking at production in Germany. What's the latest on that plan?
We get the plant in the US started first, but we've been looking at the Europe. I think Germany is one of them, but we are looking at a few other locations in Europe as well. So.
And of course, there are plans to IPO in the US. Is that on track? And how are you assessing the lackluster environment in the equity market?
Yeah, we already announced that we would like to do the IPO in the US, which is the most difficult market in the world. I mean, the market condition has been challenging, so we're watching to see, how we're looking for opportunity to go, but we're still waiting.
As always, a pleasure having you with us. Leti Tutui, VinFast CEO, for just joining us here. We're coming to you live from the Qatar Economic Forum. Tom, it is hard to concentrate with all what's happening around us.
As ever, you are the total pro. You've done brilliantly. That was an interesting interview there on the ground at the Qatar Economic Forum. We do, of course, apologise for the audio issues there. Of course, it's very busy and very loud at a very well-attended forum. Okay, coming up, we speak to former Barclays CEO, Bob Diamond, on all things investing and the macro environment, again, from the Qatar Economic Forum. Stay with us. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 45 minutes into the European trading day. Gains of more than 1% across European equities. Futures in the US, particularly the Nasdaq futures, pointing to healthy gains as well after that national holiday. Nasdaq futures pointing up by more than 2%. S&P E-minis pointing to gains of around 1.2%. 8%. Seen a bit of a pop for the pound, just a couple of lines crossing from the BOE's chief economist Hugh Pill saying that they are ready at the BOE to act more aggressively if needed. The risk of self-sustaining momentum in inflation, saying there's going to be a 12 to 18-month lag between rates going up and pulling inflation lower. Right, let's get back to what we've been hearing from the IATA conference in Doha, all things around the airline space on a day when we've heard that there's been another order from EasyJet for about 56 A320 NEOs as well. Emirates President Tim Clark hopes to have his airline fully operational by the end of the year as the sector struggles to meet surging demand for air travel. He spoke to Bloomberg's Guy Johnson at the IATA AGM in Doha.
The demand will probably remain in place, probably for the next 18 months, 2 years. And that's probably quite a bold statement, simply because the capacity that's out there in the markets is pretty restricted, despite everybody trying to get their aircraft into the air and reinvigorate their networks. It's not moving at the pace that a lot of people would like. There are restrictions in large parts of the planet today, China, Northeast Asia, etc. And it's quite difficult for a lot of the support infrastructure to get itself into place and ready to take what's going to come at us. So the problem then is that you've got the demand which can't be serviced. Does that mean that demand is going away? Possibly, but not entirely. And if you shut down places like Australia and New Zealand for 2 years, given the globalization nature of what the global economy had been going through prior to that for in fact 30 years, and the criticality of that aviation was with regard to the movement of goods and services and people, to stop it dead for 2 years and assume that you will see demand pick up its old pattern without any major spike or adjustment was unlikely to happen. And this is exactly what we said.
Why was the industry so bad at coming back? Was it simply that the industry had no choice but to lay off too many people during the downturn?
No, I think, to be quite honest, there were those, and I put us in that category, who always believed it would come back sooner rather than later, given what I've just said. So if you take our example, at the end of 20, beginning of 21, we were mapping plans for restart at pace. And that kicked in the spring of 21. So we're talking about March, April, May. And we ramped up at pace. Omicron that hit us retarded that for about 5 or 6 months, but it was nevertheless accelerated by October, November of last year. So here we are in June. We've got all our 777s flying. We have about nearly 70 of the 380s flying. Admittedly, we've got a few of those on the ground at the moment. We'll have those up and running by the end of this year, beginning of next. There is another school who believe that it would never come back before 25, 26, pre-pandemic demand. And that therefore they took a long-term view, or medium long-term view with regard to shutting down resource, human capital, all the other bits and pieces, putting them into some kind of hibernation, dormancy, if you like. And this has caught them because demand is coming back. That bow wave that I've always talked about is coming down the line.
Okay. Emirates President Sir Tim Clark there speaking to Bloomberg's Guy Johnson at the IATA AGM in Doha on the challenges for this aviation industry in the face of very strong demand, but of course a challenge around staffing and employees, particularly around airports. Right, let's take a look at some of the other things to watch out for today. 1:30 p.m. UK time, we will have Canadian retail sales figures. One to watch. Then at 3 p.m. we will have some data from the US, including existing home sales for May. That's important, given what we've seen in terms of mortgage rates getting up to about 6% stateside, is a correction in the housing market in the US in the cards. Today, German Chancellor Olaf Scholz, along with Economy Minister Robert Habeck and Finance Minister Christian Lindner, speak at the BDI Congress in Berlin. And then later, primaries as part of the 2022 election cycle take place in Virginia and Washington, D.C., while Alabama, Georgia host runoff elections. Right, let's get back then to the Qatar Economic Forum, which is underway, of course, in Doha, and is bringing together global business leaders, of course, from around the world and heads of state to tackle some of the world's most pressing challenges. My co-anchor, of course, Francine Lacroix, is standing by and is on the ground with another fantastic guest. Francine.
Hi, Tom. Good morning. Now, it is quite loud here because we have an overflow of guests. So a lot of people are trying, of course, to get into the conference center. Right behind me, we just had an extraordinary panel that our editor-in-chief did with Elon Musk. They talked about Twitter and Tesla. We also spoke about energy before. But I could not be more happy than now to talk to Bob Diamond. He's former chief executive, of course, of Barclays, founding partner and chief executive officer of Atlas Merchant Capital, for a robust conversation on inflation and acquisitions. Bob, thank you so much for joining us. When you look at some of the things that the world economy could go through, do you worry about the regions you're invested in and how you deploy capital from here?
So our focus is developed economies. So that's US, UK, Europe primarily. And while I think the headwinds facing Europe are probably more than those facing the US, we still find it very investable. You know, we've invested in Elimini in Italy. It's going extremely well. Kepler Chevreux, Paris-based broker-dealer. Again, operations are going very well. Panmure Gordon in the UK, the same. So there's no question that Europe is facing more headwinds than the US, and no question that the US is facing headwinds with inflation in a tight labor market.
So, Bob, what does it mean for the financial system in some of the countries you're invested in? So Elimini is an Italian challenger bank. Are we going to see defaults, loan-to-books that actually go down if people can't match their mortgages?
Well, I think the default situation, or credit provisions, if you will, is more the legacy banks taking deposits, making loans. Elimini is very much a technology play, and we love that. I mean, most everything that we have been doing in the last couple of years has some kind of a tech angle, and by that I don't mean crypto necessarily, but advisory platforms that have some kind of a database or technology platform. We've got some things in insurance where the technology is allowing them to connect more directly with RIA. So I think, you know, technology is just transforming so much in financial services, and it's particularly allowing things to grow outside of what you and I would consider conventional or legacy banking.
But what are some of the valuations in technology? So they've come down a lot, both in public and private markets, because of the shift in the economy. Does it mean that you can find more bargains? Are you looking for bargains?
No, I think when I think of the technology that we're investing in, or the businesses that we're investing in that have a technology edge, the valuations weren't really up because of the technology advantage. And I think on the crypto side, I mean, people are using these phrases all over, right? Technology and crypto. Valuations are down hugely, and only platforms like Circle, who have really underlying payments businesses, as opposed to Bitcoin, which is more a store of wealth, and people are in it for the increase in prices. But the overall valuations are down significantly. That's fantastic for the business we're in. If we're looking to acquire at these valuations, it's much better than the valuations that were there 3 or 6 months ago.
Bob, would you acquire anything in crypto? Or again, it's hard to see, at least from the outside, where the knife falls, given with some of the defaults or some of the payment concerns.
So you're talking to a guy that's never had any Bitcoin, so I can speak without any personal bias on that. But we're awaiting approval of our announced merger with Circle. That's something that we love. They've just raised $400 million in a very successful private round, including BlackRock and Fidelity. Circle is clearly, it's a stable coin, very different than the store of wealth. It's really a payments platform, and it's been the most conservative. And as we look forward, we really embrace regulation in this space so that investors can see the difference between a platform like Circle and U.S. digital coin versus some of the other crypto investments.
So before you deploy capital or more capital in the UK and the U.S., do you have to make a call on whether we're going to see a recession?
Well, our operating assumption is it's almost unavoidable, and some of that is just the cycle. I mean, we've had 14 years since the recession following the financial crisis in 2008, so it's been a very good period. And inflation's not going to cure itself, Francine. So seeing a cooling of the economy is something that we believe is appropriate. And frankly, the 75 basis point move by the Fed was the correct move. I think another 75 basis point move in the end of July is probably appropriate. We'll see more at the time. But our feeling is the longer we wait, the worse it will be. So clearly we're getting a slowdown in manufacturing. We're seeing a slowdown in consumer spending. A lot of these things are just part of the cycle and appropriate. And as I said, inflation's not going to cure itself. So these actions are important.
But can the Fed, you think, engineer a soft landing for the U.S.?
So I don't know whether that's a funny term. And go back to what you said is, will there be a recession? We think it's likely. But I think the more the Fed acts now, the more likely it is to be quick or short, not deep and longer.
Okay, Bob, thank you so much, as always, for your time. Bob Diamond there, the Chief Executive Officer at Atlas Merchant Capital. And with that, Tom, I'm going to send it back to you in the London studio.
Great stuff, Francine. Thank you, of course, on the ground in Doha. And those comments, of course, from Bob Diamond around the likelihood of a recession, contrasting what we heard from the US President Joe Biden, who says a recession is avoidable. Goldman Sachs raising their chances, according to their analysis, of a recession in the next 12 months from 15% to 30%. The gains across the European space, 1%. US futures pointing to gains of between 1.8 and 2% for the S&P E-minis and the NASDAQ as the US reopens after Juneteenth. So optimism and some relief in these markets. We'll see how long-lived, if indeed this is, in terms of the rebound in these markets. Stay with us. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome to Bloomberg Surveillance Early Edition. We're live in a forum, which is why there's quite a lot going on. You also caught a glimpse of our makeup artist, Alicia. We're here in Doha at the Qatar Economic Forum. As you can see, it's also very loud because we have about 300 attendees. The room inside was overpacked, so many people trying to meet some of their peers and, of course, some of their rivals in certain cases to talk about business, inflation, and, of course, investment in this region. So here are your top stories. Elon Musk says he thinks a recession in the near term is more likely than not. Speaking to Bloomberg earlier this hour, the Tesla and SpaceX chief executive also said he wants 80% of North America and half the world on Twitter. President Biden says a U.S. recession is entirely avoidable despite dire warnings from Goldman Sachs. The ECB president restates plans for consecutive rate rises. Stock futures and treasury yields are actually rising. Plus, rail workers go on strike. UK commuters brace for the largest rail walkout in 3 decades as the nation's trains grind to a halt. So definitely our top story overall, but certainly our top story here in Doha, the conversation with the richest person on the planet. Well, techno king of Tesla, chief executive of SpaceX, the boring company in Neuralink, and prospective owner of Twitter. Yes, Musk spoke at the Qatar Economic Forum via video link with our editor-in-chief, John Micklethwaite, and they covered his gradual takeover of Twitter, how he feels about censorship on and off the platform, as well as his views on Tesla's competition in the electric vehicle space. And of course, we can't speak to Elon Musk without discussing his tweets. He was also quite funny in the conversation. That, of course, includes the recent show of support to Republican candidates in the upcoming U.S. primaries and whether he's backing anyone in the next presidential election. So here are some of the highlights.
With respect to the Twitter transaction, there's a limit to what I can say publicly, given that it is somewhat of a sensitive matter. So I will have to be measured in my responses here, such as not to generate incremental lawsuits. Unfortunately,
that seems to be a risk you sometimes manage to overcome.
Yes, deposition minimization is, I think, important.
Have Twitter given you enough information?
Well, there are still a few unresolved matters. You've probably read about the question as to whether the number of fake and spam users on the system is less than 5%, as Twitter claims, which I think is probably not most people's experience when using Twitter. So we're still awaiting resolution on that matter, and that is a very significant matter. So we're awaiting resolution on that. And then, of course, there is the question of will the debt portion of the round come together, and then will the shareholders vote in favor? So I think those are the 3 things that stand in the that need to be resolved before the transaction can complete.
What about the general state of the economy? Does that weigh on you when you think about this? I mean, you just described it. You have a super bad feeling about the economy. Are you still in that position? I just said to you earlier, Joe Biden has just come out and said that a recession in America is not inevitable. How do you feel about the economy?
Well, I think a recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not. And what do you think?
I'm with you. I agree with you. I think it's more likely. Can I ask you one particular thing to do with the Twitter bid, which is, you are one of the biggest and fastest growing investors in China. Tesla, you've talked about it being 1/3 of your sales going forward. You're now buying Twitter, the kind of public forum for free speech. The Chinese historically don't tend to be very enthusiastic about free speech. Are you worried about whether you can keep those 2 particular horses running? Is buying Twitter going to get you in trouble with the Chinese?
Well, Twitter does not operate in China. Yes. So, and I think China does not attempt to interfere with the free speech of the press in the U.S. As far as I know, because I assume you're not under pressure at Bloomberg to from China. So I think there's, I don't think this is going to be an issue.
And in terms generally of that issue of freedom of speech and Twitter, you've talked about Twitter making it even freer and letting more people onto it. Is there a limit at all to who you think should be allowed onto Twitter?
Well, my aspiration for Twitter, or in general for the digital town square, would be that it is as inclusive, in the broader sense of the word, as possible. That it is an appealing system to use. So, I mean, ideally, I'd like to get like 80% of, let's say, North America, and perhaps, I don't know, half the world or something, ultimately on Twitter in one form or another. And that means it must be something that is appealing to people. It obviously cannot be a place where they feel uncomfortable or harassed, or they'll simply not use it.
Elon Musk there speaking to Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum a short time ago. Now, I am joined by John to get his impression. I mean, this was, John, really a fantastic, fantastic session. I mean, he answered questions. He was awake, and I know it's 3 a.m. for his time. What struck out the most for you?
Poor man. I think anyone who's 3 a.m. in New York and you're sitting there answering questions from the other side of the world, it was almost sort of interrogation technique.
Yeah, but it worked because we got answers.
We should do that every time.
There you go. This is a warning for all of our guests listening. Next time we do this at 3 a.m.
Imagine having Tom Keane at 3 a.m.
No one deserves to see that. John, when you look at Twitter, so does it feel like he's getting cold feet? I mean, he gave you numbers.
I think it's a mixture. He talks about it very much as if he already owns it. He talks about his ambitions for it, all that stuff. But there's definitely a kind of, I think there's a fidgetiness about the price and what the actual deal is. And I think that's a mixture of two things. I think there is a genuine question mark over what Twitter's numbers really are. I think he has some grounds for interrogation there. And then the second thing is just the economy, the markets, everything's changed. It's a bit like if you might love a house, want to go and live in it, but if all the other houses are suddenly worth 20% less, then you might think you might get a bit of a discount on your purchase.
And John, and he thinks there's a recession coming.
Yes, he said it was more likely than not. He was. I asked him about that, and he was more largely because Biden has just said that he thought a recession was not inevitable. And Musk's point was, nothing's inevitable. He's right, but honestly, this is more likely than not.
I mean, he also talked about politics. I mean, I love it because you actually, covered the world, and you kind of really got like almost raw Elon Musk that you get when you read Twitter. It was funny. What did he say about politics?
Politics, I asked him about DeSantis, the governor of Florida, who Musk and quite a lot of other, in my impression, quite a lot of other somewhat libertarian business people are pushing towards. Basically, business people are not very happy with Biden. On the other hand, I think they see Trump as a liability. And DeSantis is a sort of place where they think he ticks a lot of boxes. They think he's business friendly. They think he's not erratic like Trump. And they're prepared to overlook some of the sort of like slightly less illiberal social stuff. So that kind of thing they're not too worried about. And here is this man who could have some of the same effect of Trump, but in a somewhat saner package. So perhaps it's not surprising he's heading that way. He ducked without he had a chance to say, Musk had a chance to say he wouldn't support Trump, but he decided not to do that.
John, you've met Elon Musk many times. What surprised you about him today?
I haven't actually, the truth is I haven't met him many times. I think he's, you never know what you're going to get. And actually, if I'd known this was going to be 3 a.m. in the morning his time, I think discretion and bravery and all those things might have been the better part. But I think actually he was in quite good form. I think he was he's one of those people where he's either on for it or he's not. And today he seemed like he was in a good mood.
Himself.
Yeah.
Great job. Our editor-in-chief, John Micklethwaite, there after that interview with Elon Musk. Coming up, we talk energy with Sheikh Nawaf Al-Sabah, the Chief Executive Officer of Kuwait Petroleum Corporation. We'll ask him whether OPEC can actually do enough to overcome some of the energy crisis and energy supply crisis. This is Bloomberg.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francie Macwa here in London. Now let's focus on energy. Joining us now is Sheikh Nawaf Al-Sabah, the Chief Executive Officer of Kuwait Petroleum Corporation, who is also with me on a panel where we discuss the energy transition and, of course, some of the energy supply. So thank you for joining us, and thank you for a fantastic panel. I mean, there's a little bit of disagreement on the way forward and volatility for oil price and where we end up. How do you see the next 18 months going?
It's always tough to figure out what is going to happen in the next 18 months, because usually we're trying to figure out what's going to happen for a longer period of time. We invest over the longer period of term. We in KPC don't do short cycle investments for the purpose of short cycle investments. So we think that oil is there for the long term in terms of even in any energy transition. So we may be concerned about what obviously the next 18 months is going to do for financing and for our cash balances, but over the long term, we're quite confident that oil will remain at stable and good enough prices for us.
How does the short term, the war in Ukraine, of course, what we're seeing with COVID, change the energy transition? So the IEA said, look, we have to stop with fossil fuels if we're going to save our planet. Does that get pushed back?
No, you have to keep an eye on that as well. But the mistake that a lot of people had made before the Ukraine war was to say this is going to be a war against fossil fuels and that we must stop oil production. Well, the world is using more carbon now than it ever did before, and this crisis in the Ukraine, next to all the humanitarian issues that come with it, shows you that energy is required to fuel the future, and hydrocarbons have a big role to play. Now, can we make the hydrocarbons cleaner and more efficient? Absolutely. That's what we're trying to do, and that's what we're investing in, whether it's through carbon capture, utilization, and storage, using carbon as EOR processes, or really abating the carbon footprint of the oil barrel. We're in Kuwait, and I mentioned this earlier today, we're in Kuwait at the lowest end of the cost curve, both in cash cost and carbon footprint. Now, we need to stay there. That's going to require a lot of investment.
But there are many people, and if you speak to climate activists, I mean, they say it's just bad. So does the crisis actually and the war in Ukraine mean that we'll reach peak oil a lot longer?
No, I don't think so.
See more investment in the short term, or no?
No, you will see continued investment. I mean, at prices where they are, that is spurring investment. You're seeing some rigs coming back into action in the Permian, and you're seeing U.S. production going up over time. You're seeing a lot of us also continuing to produce. Now, for companies like KPC, we look at the long term, so we're investing right through the cycle. Yeah. But companies that don't do that are putting in more investment right now. The question right now is really about the cash cost of those investments. With inflation and steel prices and whatnot going through the roof, it's going to be an issue.
But the oil price and the energy price is so high right now. When are you expecting these prices to stabilize?
I see a war premium of about $30 in the current price right now. That, but for the war in Ukraine, you'd probably be seeing about $80, $90 barrel oil, which is not that high. And that is adjusted for inflation over the past period. It's actually, it takes you back to the last big bump that we had, somewhere in the $60, $70 range, which is still comfortable. Remember, the energy intensity of the world economy is about a third of what it was about 20 years ago. And it's continuing to go down. So oil prices, yes, they do impact economic growth to a certain extent, but the size of that impact has diminished incredibly.
Would you see any demand destruction in our conversation?
Right now, I don't see it.
Anywhere?
I see demand curtailment of growth. I haven't yet seen demand destruction. We're getting the same calls from our customers demanding the same amount of oil, and in some cases a little bit more.
Yeah, I was going to ask, more calls from Europe?
We're getting more calls from Europe for product. And that actually we are putting forward because we have a new refinery that's starting up production right now. So by the end of the year, we'll have about 615,000 barrels of oil a day converted into mostly diesel and very low sulfur fuel oil that can be used as bunker and crude.
Kuwait is one of the most important players in OPEC. OPEC has pledged to increase production in certain cases. Do you think they can make up for the loss in Russian energy?
A complete outage in Russia right now is not on the table as far as I understand. But if it were the case, no, they don't see anybody. I don't see the world being able to completely replace Russia at this point. You see demand not really falling, and you're seeing supply curtailed. Then you don't have that. The equation doesn't add up. You're also seeing over time, every year. I mentioned this earlier in our panel today. Every year, the world needs the addition of a new Kuwait to replace the natural decline in oil fields around the world. That's a lot of investment. So add on to that a loss of one of the major oil producers in the world. You're going to be hard pressed to replace them immediately.
Going back to oil prices, I know you're expecting them to stabilize. I think in a couple of years, does it stay at 150 for a while, or does it bounce around?
Well, it's not at 150 right now, but
the trend is towards that.
Yeah, as I said, again, that's a $30 war premium on that. If you take that away, you're still at a stable price. The market is going to set the price, and it was only a couple of years ago when people said, well, we're never going to see $100 oil again, and this is it for the rest of life. Prognosticators tend to have a very short vision, and it tends to be whatever is today will continue into the future. We look at it from a much longer perspective. We think that every source of energy is going to be needed in this energy transition, and we just have to make sure that it is stable and clean.
Thank you so much for joining us on Bloomberg
My
TV.
pleasure.
Sheikh Nawaf Al Sabah there, the Chief Executive Officer of Kuwait Petroleum Corporation. Now let's get straight to the Bloomberg First Word News in London. Here's Alice Atkins. Hi, Alice.
Hi, Francine. The European Union's 27 member states are set to formally grant Ukraine candidate status later this week, following a meeting of ambassadors where Bloomberg understands nobody opposed the decision. The bloc is also set to back candidate status for Moldova as well as for Georgia if the latter meets some additional conditions. Britain's biggest rail strike in 30 years starts today after unions rejected a last-minute offer from train companies. The failure of negotiations means some 40,000 staff will walk out today, Thursday and Saturday. The dispute is expected to bring commuter services to a standstill on the 3 days, with severe disruption the rest of the week. Former Treasury Secretary Larry Summers says the US will need to see unemployment above 5% for the next 5 years to curb inflation. In a speech in London, Summers warned the US may need as severe monetary tightening as Paul Volcker pushed through in the late 70s, early 80s. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Francine, I'm going to take it from here, having a little bit of sound issues there with Francine at the Qatar Economic Forum. We'll get back to her shortly. But first, let's get to Fiona Frick, CEO of Unigestion. Fiona, thanks so much for joining us. Look, it is a very strange time. You have the ECB last week laying out their plans to try to keep the Prefery in check. Let's start there. Can the ECB do this while at the same time hiking interest rates amid a Fed that's going 75 basis points?
So it's interesting to see that obviously we are changing paradigm. We were in a paradigm of easy money, and I think now there is a coordination between central bank to change that and to go into a sort of reverse Goldilocks scenario. So the US obviously started with 75 basis points. Even Switzerland came with 50 basis points, and Europe wants to do 25 in the next months. It's true to say that it's strange that Europe only does 25 when the sole mandate of the ECB, contrary to the US, is to fight inflation. We could have imagined a bit more.
But this whole idea that the Fed, okay, they might be hiking into a downturn, Fiona, isn't that even more true with Europe, with the problems with energy and gas? Isn't it more dangerous for them to be hiking at this moment?
What is the most dangerous in Europe, I would say, for the moment, is the inflation, which is very high and which creates social tension and inequalities for people, which could result in what we have seen in France with the election. So I think fighting inflation is a priority as of now. Even if it
Fiona, just cutting in, Fiona, because we do indeed have Francine back. So I'm going to throw it back over to Francine in Doha.
Yeah, thank you, Danny. Actually, we had Elon Musk saying a recession was more likely than not. So he was really the big event here in Doha today. Let's have a listen to what Mr. Musk said, and let's talk to Fiona. Here he is.
A recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
Fiona, Mr. Musk there saying at some point, do you see the Fed being able to engineer a soft landing?
It's a very difficult scenario. What the Fed has said is that they will be considering a recession if this is the cost to pay to get inflation down. So in regards to their dual objective, today, obviously, they are fighting inflation, even though it could bring the country into recession, and that is perhaps the price to pay.
But there doesn't seem any conviction, even when the markets rise. And I know they're looking at what Biden said about, not an inevitable recession. What does it mean for how you build a portfolio? Where do you want to deploy capital?
So it's complex because obviously, on the short term, there's a lot of fear index and things like that that show that there is market stress at the maximum. And generally, you could see a bear market rally because market has corrected quite strongly in the last week. Nevertheless, on the long term, we believe that all the hikes that's going to be necessary to fight inflation are not necessarily priced into the market, and therefore and the recession risk is still not totally priced into the market. So for the moment, it's more of a plausible scenario, but not the base scenario for most of the people. So we believe that following the policy that the Fed is going to put in place, it's rare that such a policy doesn't result into a recession.
Yeah. Fiona, very quickly, how does it all play out in the second half in major asset classes? What's your favorite asset class for the next 6 months?
So we quite like US dollar, and I would think that at one point government bonds, if they continue to go up, they will play their role that they haven't played since the beginning of the year of being a hedge. Obviously, when the 10-year arrive at a level where they can play this kind of parachute scenario, which they are supposed to play in an asset allocation. We also want to have allocation to real assets. Yeah. We quite like the US dollar because obviously the US situation in terms of growth is better than Europe.
Fiona, thank you so much as always. Fiona Frick there, the Chief Executive Officer of Unigestion. Coming up, we speak to Tidjane Thiam, the former Chief Executive of Credit Suisse. He's now Chairman of Freedom Acquisition. This is Bloomberg.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Here are your top stories. Elon Musk says he thinks a recession in the near term is more likely than not. Well, speaking to Bloomberg earlier this hour, the Tesla and SpaceX chief executive also said he wants 80% of North America and half the world on Twitter. President Biden says a U.S. recession is entirely avoidable despite dire warnings from Goldman Sachs, while the ECB president restates plans for consecutive rate rises, stock futures and treasury yields rise. Plus, rail workers go on strike. UK commuters brace for the largest rail walkout in 3 decades as the nation's trains grind to a halt. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha. We're here at the Qatar Economic Forum. We've had some pretty good conversations on the economy and inflation. And, of course, we also spoke to the richest person on the planet. That was our editor-in-chief talking to Elon Musk. He spoke to us at the Qatar Economic Forum via video link on his Twitter takeover plans and how he feels about censorship on and off the platform. Of course, we couldn't speak to Elon Musk without discussing politics and whether he's backing anyone in the next presidential election. So here are some of the highlights.
There are still a few unresolved matters. You've probably read about the question as to whether the number of fake and spam users on the system is less than 5%, as Twitter claims, which I think is probably not most people's experience when using Twitter. So we're still awaiting resolution on that matter, and that is a very significant matter. So we're awaiting resolution on that. And then, of course, there is the question of will the debt portion of the round come together, and then will the shareholders vote in favor? So I think those are the three things that stand in the that need to be resolved before the transaction can complete.
What about the general state of the economy? Does that weigh on you when you think about this? I mean, you just described it. You have a super bad feeling about the economy. Are you still in that position? I just said to you earlier, Joe Biden has just come out and said that a recession in America is not inevitable. How do you feel about the economy?
Well, I think a recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
Can you set the record straight on one thing, which is this issue about the layoffs? I think you said initially that Tesla, 10% of the workforce would be cut, then 10% of salaried would be cut, then salaried would stay flat and overall headcount would go up. What is the number? I know there's already, I think, been a lawsuit about the 10%. Is 10% the goal to reduce the workforce, or what is the number that we should think about, or that you're planning?
Yes. So Tesla is reducing the salaried workforce by roughly 10% over the next probably 3 months or so. We expect to grow our hourly workforce. It's quite clear that we expect to grow our hourly workforce, but we grew very fast on the salaried side, and we grew a little too fast in some areas, and so it requires a reduction in the salaried workforce. And we're about 2/3 hourly and 1/3 salary. So I guess technically a 10% reduction in the salaried workforce is only roughly a 3.5% reduction in total headcount.
The Tesla chief executive there speaking to Bloomberg News editor-in-chief John Micklethwaite at the Qatar Economic Forum just a short time ago. Now, Freedom Acquisition Corp is a SPAC led by the former Credit Suisse chief executive Tidjane Thiam, and it's reportedly will merger with Human Longevity, a California-based life science group. This is according to a report in the Financial Times. So let's get straight to Tidjane Thiam to talk about that story, to talk about SPACs in general, and maybe, just maybe, we'll mention Credit Suisse. So, Tidjane, first of all, can you confirm? Good morning to you. Thank you so much for joining us.
It's a pleasure to see you.
Have you acquired something?
We announced yesterday that we are going to merge with a company called Human Longevity, created by Craig Venter. Craig Venter is really the main architect of the Human Genome Project under President Clinton, and he created that company, which mission is to help humans live longer and healthier lives. So it's very simple.
So how difficult, first of all, I mean, SPAC is a buzzword and now people are less interested. How difficult is it to find targets and acquisitions for SPACs?
I think the SPACs have a raison d'être. A SPAC should really be led by sponsors with some delivery track record and credibility, and provided that there's a good set of investors, we have found the process reasonably easy. We have talked to more than 70 targets, never had a difficulty talking to targets, and there are always companies looking for capital, and there are always companies looking for support and people who can guide them, which is what we provide. So, you know, that financial innovation is such that there is always a kind of overshooting at the beginning. So I think not all SPACs fit the description that I just made of what a SPAC should be, and there'll be this market is going to sort itself out.
Yeah. Do you think that would be also with extra regulations? We know the SEC is looking at the SPAC market, maybe making even some of the companies that finance them liable.
I think the SEC is trying to, promote things that are reasonable. More transparency, better communication from the SPAC sponsors. We don't really have an issue with that, and I think it will help in clearing out possibly. How can I say this? Maybe the excessive number of SPACs that have been created.
So what do you say to those that say SPACs are risky assets?
Look, there's no return without risk. Okay, so hopefully they are risky, and hopefully the return more than rewards you for the risk you're taking. They're not riskier than, I think, over equity instruments. You just have to be, part of the reason why we're only announcing a deal now is that we've been disciplined. I think I should add to, good sponsors, good investors, should be investment discipline. Okay, we could have done a deal 4 weeks into the SPAC, and I passed up an opportunity that's now trading at $150 from $10. So you have to be disciplined and only do a deal when you find the right opportunity.
Where do you see the world economy going? So are you, expecting a recession maybe in the U.S.? And does it make it more difficult to deploy capital as inflation is rising?
I think a recession is unavoidable. When you look at all the forces at work, first of all, the inflation. We can debate the causes, but the inflation is very high. Central banks absolutely need to squash the anchoring of inflation expectations. So they need to get market to believe that inflation will be low, and to achieve that, they need to surprise investors. So I can say, brace yourselves. There'll be more surprise moves from central banks because they need to deal with inflation, and that will have a ripple effect across markets. So there is inflation, there's supply chain issues, I'm sure you covered, there's Ukraine, there's China and its zero COVID policy. So the conjunction of all those factors mean that there's going to be more volatility, and certainly markets will go lower with buying opportunities. For somebody like me who wants to deploy capital and buy, there will be
But
opportunities.
Tidjane, when you say it's unavoidable, what kind of recession? Is it a short-lived recession? It is a long and ugly recession. And again, what does it mean for also certain parts of the world that are much more vulnerable? Private
absolutely.
markets, public markets, but also people that can starve.
I'm unable to predict the shape of a recession. We hope that policymakers and central banks will work hard so the recession is as mild as possible. But yes, some emerging markets, particularly the ones who are not oil producing or oil exporting, are under immense pressure because the rise in interest rates in developed markets makes those currencies stronger. If you have an emerging market, you also need to raise interest rates to defend your currency. And if you don't do that, your currency weakens, and then your imports are even more expensive and everything gets worse. So you can expect pretty aggressive action from emerging market central banks, which will then slow down their economies, and then you get into a kind of vicious circle between developed market and emerging markets slowing down.
Tidjane, you know Credit Suisse intimately. It's in the news for all the wrong reasons every 2 weeks. What's happening at Credit Suisse?
I really can't comment on what's going on at Credit Suisse. I can talk about what I did there and what happened when I was there. We were pretty proud of what we did.
What do you think will happen to it? Is it a takeover target now? How do you even start fixing the bank?
I'm really going to focus on what I'm doing now, which is to raise capital, find targets to invest in. Of course, I watch what's happened with sadness, having spent 5 years of my life at Credit Suisse. I have many good friends and colleagues there who work very hard, and I wish them well.
Yeah. Do you read the news about Credit Suisse every day, or there must be an emotional link still to the bank, right?
From time to time. I only wish Credit Suisse well.
Okay. Every time there's a new chief executive rumor about someone being in a job for a big job, you always come up. Do you think you have it in you to lead another big bank, a big financial institution?
Look, I'm happy with what I'm doing. I was offered, to be honest, quite a few opportunities after Credit Suisse, and I decided not to take them. It's been very refreshing for me to be in touch with the most innovative part of the economy. I said we saw 75 companies. I'm really amazed by the impact that technology is having in the economy across geographies, empowering people, helping fight poverty. And by the way, all the founders I meet are not doing what they're doing to make money. The people at Human Longevity, they want to increase the length of life of humans. Now, they may make money in the process, but this kind of doing well by doing good, I think is very strong in the generation after mine. And I think that's good news for the world, and I'm thrilled to be involved in all that.
Is that different from running a big bank? Because the bank should also service the economy, right? It should service some of the tech companies that you're talking about.
No, I've always picked jobs where I could feel good about what I do. So that was the case in insurance. We turned Prudential into a health insurance company, providing health insurance across Asia. At Credit Suisse, what I did was also be a bank for entrepreneurs. That was the tagline. Helping entrepreneurs create jobs, develop their businesses, pass it on to their children. So I need to do things that have a meaning.
Would you ever go into politics? That would have meaning. And I know France is very close to your heart, and Mr. Macron has had a pretty ugly weekend.
I've always believed that what I try to have is influence. I try to be listened to. When people ask me for my view, I give it. For the rest, I'm very cautious about making any kind of forecast about the future, so we'll see. Maybe ask me again.
All right, but you'll have to tell Bloomberg first. That
Always.
has to be a deal.
I did my last CEO interview with you, and this is my first TV interview since then, so you always have a special place with me.
Tidjane Thiam, thank you so much for joining us, the Freedom Acquisition Corp Chairman, of course, former Credit Suisse Chief Executive. We have a lot to talk about when it comes to Credit Suisse, so hopefully, Mr. Tidjane, of course, we'll come back on to talk about that. Now, we talk also about inflation with the former Fed Governor, Randall Posner. That interview is up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here at the Qatar Economic Forum. You can see the real buzz around me as people are talking about inflation, recession, of course, opportunities for the region. Now, the Federal Bank of St. Louis President James Bullard has reiterated his view that high inflation is testing the Fed's credibility, and rising prices are putting two of the most powerful people on earth at loggerheads. While the U.S. president says the U.S. is not headed towards a recession, the world's richest man disagrees.
I was talking to Larry Summers this morning, and there's nothing inevitable about a recession.
A recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
Well, for a robust conversation, economics and inflation, we're now joined by Randy Kroesner, a former Fed governor and deputy dean at the University of Chicago's Booth Business School. So, Randy, as always, thank you so much for joining us. At this juncture in time, with all the inflationary pressures coming from all sides, can the Fed really engineer a soft landing?
It ain't going to be easy. Obviously, they're trying, and that's what they'd like to do. And Jay Powell has sort of tried to say, well, it'll be a softish landing, which means that there's a chance that it could be kind of hard. It's going to be really tough to bring interest rates up enough to bring inflation down and to maintain credibility without at least a significant slowdown, if not a potential recession.
So, Randy, what does it mean, what you think the Fed should do now? Should they, we just had 75 basis points, should they go quite aggressive now to make sure that they get a handle on it so that even if we do get a recession, it's short-lived?
I think it's super important for them to be moving expeditiously now, and whether that's 50 or 75 at the next meeting, I think will depend to some extent on the data. But they clearly have gotten religion about inflation, rather than they've forgotten about it being transitory. They've said, yes, we're going to deal with it. This is our key problem. We want to try to maintain our credibility, and to do that, they need to move aggressively. And I think by moving aggressively now, if there is a recession, it's going to be much more shallow than if they wait and then have to raise interest rates even further because they've lost credibility and inflation expectations have risen.
So, Randy, why were we so bad at seeing this inflation? I mean, not everyone. Larry Summers had it right, but why were central banks, outrun on this?
Yeah, I think that's a very good question because, Larry, of course, saw it, a number of economists saw it, but most central bankers, or I don't think any central bankers, saw it coming. They were all attributing it to transitory factors. And certainly there were some transitory factors, but I think part of what it was is they'd had such low inflation experience for the last 10 to 15 years that they were thinking, well, there's really not much that generates this high inflation pressure, and if it does, it's just sort of a one-off type of thing. That was a mistake because I think they didn't understand the extent of the supply disruptions, and I think they also didn't think about how the regime shifted so that all of that support that they were providing turned into inflationary pressure, which it didn't a decade ago.
So do you think we're now reading inflation better, Randy, or is there a danger that we'll redo the same mistake once and even twice over?
Well, certainly, I think it's very, very difficult to predict exactly what's going to happen with inflation. There will be supply pressures. There will be pressures related to the war, related to sanctions, which obviously are outside of central bank control. But I think most central banks are now predicting very significant inflation for this year. Like here in the UK, they're predicting that it could easily go to double-digit levels. So I think central banks are being much more realistic about it. I think what they're not being realistic about is how quickly they can bring inflation down. I think it's going to take a while, not just a year, but probably 2 years to be able to get close to 2% inflation targets.
Randy, what kind of, I know this is a difficult question and it depends on what central banks do, but if, the Fed says, or if the Fed is aggressive now, and if we have a recession, what kind of recession will we get? How long could it last and who will be hit hardest?
So people in the lower half of the income distribution are almost always the ones who are hit hardest in one of these, in any type of recession. Now, fortunately, the unemployment rate is extremely low. It's at 40, 50-year lows, and it undoubtedly will go up but hopefully it won't go up nearly as much as it, or to levels in other recessions of 7-8%. It's possible that we could have something that would be more mild with respect to the labor market, and so only go up in the order of to 5 or 6%, although that would certainly be higher than it is now. I think it's very hard to say because a lot will depend not just on the Fed and central banks, but also on these shocks related to the war and sanctions.
When do you think we'll have, I mean, of course, if there's some kind of embargo coming from Russia on oil, it's going to be very, very difficult to come out from that. But when do you think we have an idea of whether we can, really sever that independence from Russia to energy and what that means for inflation dynamics?
Yeah, I think that's going to take a while because, we've seen the debates, whether they're in Europe over reopening or maintaining coal plants, reopening or maintaining nuclear power plants. We have those debates in the U.S. of whether the hydrocarbon producers should be investing more and producing more now, or should they be moving in a green direction. You've got these tensions making it very difficult for the energy market to kind of smooth out. In normal circumstances, in an area where prices are super high, you're going to get a lot of investment, and then that'll bring the prices down eventually. Here, because we want to move away from hydrocarbons, and so many policies in the intermediate to long run are for in that direction, it's harder to get the investment to make that relief in the short run. So I think we're going to see a lot of high prices and a lot of volatility in the short run because you're not going to get the investment to smooth things out.
Randy, thanks so much, as always, for joining us. Randy Krosner, their former Fed governor and deputy dean at the University of Chicago's Booth Business School, joining us this morning for a good conversation on inflation dynamics. Now, coming up, the UK is hit by the biggest rail strike in 3 decades after talks come to a grinding halt. We'll have much more on that story next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this week, the UK will experience the biggest rail strike in 3 decades after last-ditch talks over pay and redundancies failed. The walkout by 40,000 workers has been branded total misery by the government. So let's get more on this with Bloomberg's Laura Wright. So Laura, good morning to you. What's the latest so far this morning?
Well, Francine, lucky for you, you've managed to escape the UK at just the right time. National rail strikes on Tuesday, Thursday and Saturday of this week. Half the rail network will be closed, and of the lines that remain open, only a 20% service will be operating. To make things worse here in the capital and add to commuter chaos, Transport for London workers on the Underground are also walking out today. Now, the primary reason behind the strikes is pay. The RMT union are requesting a 7% pay increase for their members. So far, they've only received 2%. They say this simply is not enough. The squeeze on UK incomes is real. I have a chart which nicely illustrates this. You can see that real wages for the month of April, year over year, excluding bonuses, down almost 3.5%. To put that in context, it's the worst reading since the ONS started tracking this data all the way back in 2001. And in reality, the situation on the ground even worse, Francine, because of the cost of living crisis.
Yeah, Laura, thanks so much. Laura Wright there with some of those pretty hard, of course, hard rail strikes and what it means for people trying to get to work. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, Anna Edwards will be in London, and this is Bloomberg.
Nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And It is very powerful, and I'm a big believer in it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
A recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not.
If you think that we have a recession in 6 to 9 months, the downside from here is substantial. If you believe that the recession is in the latter half of 23 or further out, then you got to buy stocks right here because the earnings will come through.
The pendulum has swung from full greed to, I think, pretty full fear. And that's the good time generally to be buying stocks when they're down.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Elon Musk speaks to Bloomberg about Twitter, Tesla, the economy, and politics. The Tesla CEO spells out the roadblocks to his Twitter deal in an interview with Bloomberg News. A warning from Goldman Sachs. The firm says the risk of a U.S. recession is rising and cuts its economic growth forecasts. And Janet Yellen says to stay tuned for word on how the U.S. and its allies may cap the price of Russian oil. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Kaylee, good to see you. So the recession warning's getting louder, or at least more frequent, it seems, and yet risk assets get a boost from somewhere.
Yeah, a little bit of a rebound taking shape today after $2 trillion in value was wiped off of the U.S. equity market last week. So the question really is, will this rebound stick as you do have these recession fears so dominating the market narrative right now? Now, speaking of a rebound, you definitely saw that taking place in Asia overnight. The MSCI Asia Pacific Index snapped an 8-day losing streak to gain about 1.5% overall. Now, China was a bit of a laggard within that. There are concern around COVID outbreaks in Shenzhen and Macau. But broadly speaking, the global narrative really is focused on central bank policy, the tightening of it, and what that means for economic growth. Interestingly, though, in Australia overnight, you saw the two-year yield coming in 12.5 basis points after the RBA Governor Philip Lowe pushed back on the idea of a 75 basis point hike next month. So maybe not following the Fed in that regard. Also, one central bank definitely not following the Fed would be the Bank of Japan, not tightening policy as the Fed is. And so you continue to see the weakening of the Japanese yen. We're at 135.29, remaining right around the lowest level since 1998 on dollar yen. And finally, in commodities, I just wanted to point to palm oil. If you remember back in April, Indonesia halted exports of palm oil due to inflation. That sent prices to a record high. Now palm oil actually is in a bear market, falling about 3.6% overnight as Indonesia starts ramping up those exports once again. So maybe that helps the food inflation story, Matt.
Certainly Nutella could be cheaper. Take a look at what we're seeing here in U.S. futures, up 2% after the massive wealth destruction that we saw last week. Kaylee just pointed out $2 trillion in U.S. stocks alone. The U.S. 10-year yield coming up a little bit as investors let go of that paper right now. 326 is the level there. Of course, last week we soared at one point to almost 340 and came down substantially. We came down substantially in NYMEX crude. On Friday, there was a 7% drop in oil prices. So even though we touched 124 last week, we came off and now we're headed back up, but only to 111.85. And then that down and then back up story is nowhere more evident than Bitcoin. We went below $18,000 on Saturday. I was glued to my Bloomberg all weekend, which actually is not unusual. But then we bounced back up. So now 21,387. It looks like investors, at least on the retail side, thinking that we can hodl at these levels. Anna, what do you see in terms of European markets?
European equity markets here for the second day of the week. Of course, we had gains here in Europe yesterday, so part of what the US session is set to do, I suppose, is catch up with some of that. But we've got more to add here on the positive side. So European stocks once again moving higher as we see those US futures pick up the baton and run higher still. So the CAC 40 and the Xetra both showing gains of over 1%. And in fact, it's broad-based, it's pretty well spread. We are higher on most sectors across the European equity markets this morning. In terms of that risk appetite, and it does seem to be quite a risk-on day, with not a huge number of very evident catalysts for that, other than, as Kaylee was referencing, the rebound from the losses of last week. We do see risk-on moves in other asset classes as well, including FX. Euro is higher, the pound is higher, both against a broadly weaker dollar as appetite for risk seems to have increased from somewhere. So 105.74 on the euro. We heard from the ECB a lot of recommitment to the rate hike path ahead and talk about fragmentation, the tools to fight that ongoing. The pound also up by 0.4%. Hugh Pill, the chief economist at the Bank of England, saying that the Bank of England would sacrifice growth to achieve inflation goals, which struck me as a fairly candid comment and very relevant in other geographies as well. Brent crude up by 1.1%, but as Matt was saying, a big drop during Friday's session on oil prices broadly. We were up at $120 a barrel back on Friday, 115 the handle now. And here's natural gas up again. Last week we saw the biggest increase in natural gas prices since the start of the war in Ukraine. Now we are seeing further gains day after day, it seems, on gas prices as we watch what Russia is doing, turning down the amount of flow it will send from Russia into Germany, into Europe more broadly. Also at the Qatar Economic Forum, seeing calls from the Qataris for more investments into LNG and the like, Kaylee.
All right, Anna, certainly there is a lot going on today, and there is going to be more going on throughout the rest of this Tuesday. Of course, we will continue to follow the Bloomberg Qatar Economic Forum, which kicks off with a stellar lineup of guests, including former Treasury Secretary Steve Mnuchin and the Blackstone CEO Steve Schwartzman. Then we'll also hear from Richmond Fed President Tom Barkin and Cleveland Fed President Loretta Mester, who will both be speaking at events. What will they say in light of that 75 basis point hike last week? And finally, we'll get some U.S. economic data, including existing home sales at 10 a.m. New York time. Housing somewhere you're really starting to feel the impact of higher rates already, Matt.
Yeah, absolutely. We'll watch all that, but we're paying particular attention to what Elon Musk says this morning, warning that a recession looks more likely than not. He spoke to our editor-in-chief, John Micklethwaite, in an exclusive interview at the Qatar Economic Forum in Doha.
A recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
Bloomberg's Guy Johnson joins us from the forum for more on that interview. So we covered an incredibly wide range of topics. Obviously, Guy, there's a lot to talk about with Elon Musk, from Tesla to Twitter. What were your takeaways?
So many takeaways, Matt. He covered, as you say, a huge amount of ground, and this in the middle of the night over in the United States. He joined us by video link. To be honest, I am rapidly coming to the conclusion that Elon Musk simply does not sleep. But yeah, it was a pretty wide-ranging conversation. I think that probably puts it mildly. He talked about the recession. You just heard what he had to say there. Remember, he has been fairly downbeat about the outlook for the economy for a while now, and he is laying off staff over at Tesla. He talked about Twitter there. I have to say, just kind of reading between the lines, doesn't feel that passionate about Twitter anymore. He doesn't talk about it in the way that I've heard him talk about it in the past. So I'm just wondering kind of where we are in that process in reality. He doesn't really have that kind of that instinct that he really is kind of all in here on this one. He talks about Tesla. To be honest, Matt, I thought the Tesla stuff was probably some of the most interesting comments that he made here. He talks about the idea that Tesla remains supply constrained. He talks about the fact that there are long waiting lists for a Tesla. He said that's not by design. It's simply the fact that we are struggling to make the cars that are needed to satisfy that demand. He's not worried about competition. He's worried about the supply chain. That is his real focus right now. He, of course, talked about what is happening with crypto. We've talked about the volatility already on the show as to what is happening there in Matt's weekend. I'm sure that probably is a reflection of reality of Matt's weekend. But he did say that he said he support Doge, and he will continue to support Doge, Kayleigh, and I think he's going to continue to do that. And he wrapped it up, I have to say, with some fairly interesting comments on AI. This obviously comes after Google had some issues there, but he has in the past talked about the need for a regulator for AI, and he reinforced that comment today. But I thought it was a fascinating conversation for a man who was speaking in the middle of the night. He seemed relaxed, he seemed calm, he seemed kind of into all the subjects that we were talking about, and he was pretty relaxed to talk about most of them. He didn't, though, which I think his lawyers are going to be happy about, Kayleigh, make any significant headlines here that they're going to be worried about.
Yeah, someone on Twitter called it the polite version of Elon Musk's guy, and who needs sleep anyway? Bloomberg's Guy Johnson in Qatar, thank you so much, and we'll have more of that interview with Elon Musk later on this hour. Meanwhile, Elon Musk was talking of a recession, but he is not the only one. Goldman Sachs economists cutting their U.S. growth forecast and warned that the risk of a U.S. recession is rising. Let's get more with Bloomberg's Danny Berger. And Danny, I believe it's 48% implied odds over the next 2 years?
Yeah, exactly. So that's over the next 2 years. Just in the next year, it's 30%, Kayleigh. That's an upgrade from 15%. And if we don't get a recession in the next year, then the one for the year after that is 25%. So a lot of numbers to throw at you, but basically just to say recession odds are rising. And Goldman analysts basically saying because the Fed has tied themselves to headline inflation. In other words, they've tied themselves to energy prices, writing, we are increasingly concerned that the Fed will feel compelled to respond forcefully to high headline inflation and consumer inflation expectations if energy prices rise further, even if activity slows sharply. That's the key thing, because activity could slow, prices could drop elsewhere, but as long as energy remains high, the Fed is going to have to hike rates. This kind of gets to what Larry Summers said, that 5% unemployment would be the rate we need to hit for 5 years in order to get inflation back down. I mean, that certainly sounds like some recessionary forces there. The question after that, once we've decided, okay, higher recessionary odds, what's priced in? Here, there's also a lot of disagreement. Morgan Stanley, Mike Wilson over there says that we need to drop another 15 to 20% in order for the stock market to reach an inflationary situation where it's reflecting that. Goldman, Peter Oppenheimer says we're already pricing in a mild recession. And Marko Kolanovic, ever the bull, about a month ago, and has been saying 70% or more are the odds the stock market is pricing in for a recession. And that is too much, Anna. Perhaps one of the lone ones to not see a recession coming, or at least higher odds of it.
Of course, that conversation with Elon Musk covered the likelihood of recession. For what it's worth, his view, recession in the near term, more likely than not. Danny, thank you very much. Bloomberg's Danny Berger with the latest on recession thinking on Wall Street. How does that sound to the White House? President Biden has reiterated that a U.S. recession isn't, in his view, inevitable. He spoke following a conversation with former Treasury Secretary Larry Summers, who sees a significant chance the country will find itself battling stagflation.
I was talking to Larry Summers this morning, and there's nothing inevitable about a recession.
Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. for more. Second day in a row, I think, we've had this commentary from President Biden that a recession is not inevitable.
And that's his job as the president to say that, right? Of course, a recession is not guaranteed here, although we will remind everyone, to your point, Larry Summers has been talking about this, among the first to ring the bell on inflation, among the first to call for higher interest rates, and now, of course, warning of potential stagflation. But listen closely to what the president said. If you kept the tape rolling there for a moment, nothing is inevitable about a recession, he said, and went on to say, I think we're going to be able to get a change in Medicare and a reduction in the cost of insulin. He's referring to a package of legislation aimed at lowering costs from the Build Back Better plan that failed to pass last year. Democrats are talking about a smaller version right now that could pass through reconciliation with Democrat-only votes. But there is no legislation yet to vote on and no guarantee that that could pass. So if that's what he's thinking right now, along with some other ideas, including a gas tax holiday, maybe even gas pump rebate cards, these would require Congress to sign off on these, and we don't know that there's any path through the Senate on them. So the president obviously doesn't want to talk down the economy. They're looking at a lot of different options right now to try to control prices, but there's not a lot new here.
Treasury Secretary Janet Yellen speaking, saying talks are continuing on how the U.S. and its allies might cap the price of Russian oil exports. Listen to what she said yesterday.
We are talking about price caps or a price exception that would enhance and strengthen recent and proposed energy restrictions by Europe, the United States, the UK, and others that would push down the price of Russian oil and depress Putin's revenues while allowing more oil supply to reach the global market.
It's so great when trained economists talk about price caps like they're a good idea. That's what politics can do to people, right?
You're the expert, Matt. All I know is this is not new. You know, we sit around listening to these long hearings in Washington for a reason. This is something that was floated a couple of weeks ago by Yellen before the Senate Finance Committee when she was in testimony. Essentially, they would ban insurance for crude oil for Russian oil shipments above a certain amount, which would be the equivalent of a cap. I mentioned, again, she talked about this a couple of weeks ago. The whole point here, though, is to kind of have your cake and eat it, too, to keep Russian oil flowing, but also depress prices at the same time. And it's unclear, Matt, if that's possible.
All right, Bloomberg's Joe Matthew in Washington for us. Thank you so much. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And I have to begin with Spirit Airlines because this saga with bidders from Frontier and from JetBlue continues. Now JetBlue upping its offer price for Spirit by $2 a share, now to $33.50, up from that $31.50 they offered earlier in June. They really want to buy this discount airline. As a result, Spirit is up about 13% in pre-market trading, still though below that offer price, trading at $24 a share. Another stock moving higher I wanted to check on is Coinbase, because basically all crypto-related equities are benefiting today from the stabilization, the rebound we are seeing in crypto. After, over the weekend, we saw dramatic price action, a plunge down below $18,000, then a spike back up over the last couple of days. You are seeing Coinbase benefiting from that as U.S. markets reopen for trading today, or at least pre-market trading at this point, up about 4.5%. And finally, we talked with Guy Johnson there about Elon Musk's, the conversation he had with John Micklethwait, including headcount at Tesla. Overall headcount going to come down about 3.5%, at least in the near term, but he actually thinks headcount will be higher a year from now. So investors may be taking a bit of optimism from Elon Musk's comments, even if he is worried about the supply chain, because Tesla shares up about 3% before the bell, Anna.
Coming up next on the program then, Kaylee, we will get back to the market conversation. We'll talk to Nigel Bolton, BlackRock Fundamental Equities co-CIO. How do the warnings around recession sound to him, and what do they mean for investment strategy? And we'll be live from the Qatar Economic Forum, of course. We'll be speaking to the Vitol CEO, Russell Hardy. Important conversation around energy at this point. Plus, Jenny Johnson, Franklin Templeton Investments CEO, joins the program. This is Bloomberg.
City of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons. Anna Edwards with us out of London. I'm looking at the S&P 500, which has come down substantially. You may have noticed, especially if you're long stocks, opening up your 401k every month and seeing that you're losing more and more money. Earnings estimates have not come down at all right now. So the question is, where is the street on what companies can make if what we expect from their future income in terms of stock prices is so much lower? Nigel Bolton joins us right now, Co-Chief Investment Officer of BlackRock Fundamental Equities. Nigel, what do you think is wrong? Are analysts just yet to catch up with the whole picture? Have they not factored in inflation and margin compression?
I think you're spot on there, Matt. Look, analysts are kind of listening to companies, and companies will tell you what's kind of just happened or maybe what's just happening immediately. But you have to really look forward, and that's what the equity market's doing. It's looking forward, and it's telling you that there is likely an earnings recession coming. And I think, that's my kind of base case now, that we have an earnings recession coming. This is not, we don't believe, a GFC type bear market. This is more of a cyclical standard kind of type bear market. So from an earnings perspective, I would be expecting earnings to be coming down somewhere in the region of 10 to 15%. There is not the big imbalances out there that would really justify a bigger reduction in earnings at the moment.
What about a bigger reduction in prices, though, Nigel? You have Mike Wilson over at Morgan Stanley saying the S&P needs to drop another 15 to 20% to about the 3,000 level to accurately price in the growth risk, the economic contraction we are facing. What is priced in? What is enough?
I think he's probably about right, Kaylee, to be honest. I'm looking at 3,000 on the S&P 500 as an area where you really want to start thinking about buying then. If you look at where the S&P 500 is on a Shiller basis, it's still pretty expensive, and it has to get back to the 3,000 level to get you to the long-term median, which is around about 24 times on a Shiller PE. So to me, the S&P is still an expensive market. Remember, we were back at 3,000 in December 2019, so it's not that long ago. It seems, we've had a very strong market. I think we've probably still got further to go.
And over here in Europe then, Nigel, I know that the banking sector is something that you're watching closely. You like the banking sector here in Europe. Is that based on higher rates? Is it all about share buybacks? Is it all about M&A, or all of the above?
We do like the bank sector in Europe. Look, one is it's really cheap. Second is the balance sheets are in pretty good shape. You've got cash share buybacks coming. You've got higher dividends as well. And I think everybody has a kind of muscle memory of the GFC, and this is terrible for the banking sectors. But actually, banks can outperform in a relatively moderate recessionary environment. And I think that's the kind of environment that we're thinking about. So we do see that sector as being attractive. It's also a sector that is pretty underowned. A lot of people have avoided that sector. And just on the European market overall, the European market is actually back at its long-term average in terms of the Shiller PE, whereas the US, as I mentioned, is still 20% expensive. So I think Europe is looking attractive from a valuation perspective, but there's still a lot of uncertainties related to the war, related to potential recession there.
So Europe looks attractive, a lot of uncertainties. Where does that leave you on commodities? And Europe does a good line, of course, in energy businesses and basic resources. I ask it that way because actually we've seen quite divergent trends of late in oil being pushed higher by geopolitics, and then the metal space, which looks very different and a lot weaker. Where do we stand on commodities?
Yeah, so look, we see natural resources as being a really good kind of hedge for more inflationary pressures over the medium to long term. In the short term, we've had some pretty strong performance across the market, and that differential you're pointing out really is reflecting the expected demand-supply imbalances. Energy, we see as having a continued imbalance on the supply side there, so price is likely to remain high, and we do see that sector as both attractive in the renewables and in the more traditional space as well. And then when you look at the kind of the mining sector, if you like, again, there's still a long-term imbalance of supply. We've had a lack of investment over the last 5 or 6 years. So the fundamentals stack up pretty well there. But in the short term, you're probably a little bit more susceptible to weakening demand.
Well, of course, the energy complex and the higher prices we are seeing is something Goldman Sachs cited in its call potentially for a 30% chance of recession, saying that the Fed is going to respond to headline inflation, which of course energy contributes to, and that means that they will continue to be aggressive even if data starts to deteriorate. I'm wondering where that leaves the bond market if you have an aggressive Fed on the one hand, but fears on growth on the other, and where your yield call then comes in back to equities.
Yeah, look, I think the bond market is in a pretty tough place overall. I still think that, we've had an incredible 40-year, frankly, bull market in bonds. And I think the low of yields was sort of seen over the last year or two. We're going to track a little bit higher from here. We've already come a long way, but I think it's going to be very difficult to see yields falling anytime soon.
All right, Nigel Bolton of BlackRock, great to get your thoughts this morning. Thank you so much for joining us. Now, keeping you up to date with other news from around the world, here's the first word. Bloomberg has learned that the European Union's 27 members are set to formally grant Ukraine candidate status later this week. That's a first, but highly symbolic step on the long path to becoming an EU member. EU leaders will discuss Ukraine's membership bid this week. In the UK, the biggest rail strike in 3 decades is underway. Unions rejected a last-minute offer from train companies. Some 40,000 workers are walking out today, Thursday, and Saturday. That's bringing commuter services to a halt and threatening to cause transport chaos in London. And cryptocurrencies are showing signs of recovering from last week's rout. Bitcoin rose and held above $20,000 after falling below that level last week for the first time since 2020. So-called altcoins also are gaining. And Matt, of course, this is a conversation we will be having later on today on Bloomberg Crypto, coming up at 1 p.m. Eastern time. The question really is the bottom in now? Is this a dip finally that people are able to buy?
Yeah, I think that was the question for a lot of people over the weekend, but certainly they were buying the dip nonetheless. It is interesting that there's now a short Bitcoin ETF that maybe will cushion falls like this in the future because people will have to cover when it drops. But there's certainly a lot to talk about, and I hope everyone tunes in at 1 p.m. Eastern time for Bloomberg Crypto.
1 p.m. Eastern time for Bloomberg Crypto. Got it. We definitely will. A lot to talk about. Yeah, absolutely. An incredible weekend of volatility and a little bit of recovery, a little bit of stabilization then just in the last 24 hours or so. Coming up then on the program, we will be back live to the Bloomberg Qatar Economic Forum. The Vitol CEO, Russell Hardy, speaking to Bloomberg next. We'll get into a conversation about energy markets, about transportation of oil globally. We will talk about that with Russell. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Elon Musk speaks to Bloomberg about Twitter, Tesla, the economy and politics. The Tesla CEO spells out the roadblocks to his Twitter deal in an interview with Bloomberg News. A warning from Goldman Sachs. The firm says the risk of a US recession is rising and cuts its economic growth forecasts. Janet Yellen says to stay tuned for word on how the US and its allies may cap the price of Russian oil. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, European equity markets, US futures, all signaling we're trying to turn the page, trying to get over what happened last week, the volatility and the heavy selling of risk assets that we saw towards the end.
Yeah, maybe the idea is that we fell too far, too fast last week, or the last 2 weeks. We're looking at S&P futures up almost 2% this morning. So could be a big rally at the open, and investors are letting go of 10-year debt, the yield rising to 326. I will point out also that we are not inverted in 2s, 10s. We are still inverted when you look at the 5s, 30s. But a lot of assets came down substantially on Friday and are now, or Saturday, and are now heading back up. Oil is one of those with an almost 7% drop for NYMEX crude. So if you remember NYMEX getting close to 124 last week, it came down a lot, and now it's headed back up. A 2% gain to 111.85. And then Bitcoin. I was just shocked this weekend to watch it fall below 18,000. That's because there's a level around 19,000 and change that everyone was so sure would hold. It did not. Nonetheless, it was a signal to, I'm guessing, retail investors, maybe some institutional, maybe Mike Novogratz went in and bought some more to buy. And now Bitcoin is back up to 21,219. There's also a short Bitcoin ETF that's newly issued. We'll be talking about that in our crypto show today. Have I mentioned this? We have a crypto show every Tuesday, me and Kaylee at 1 p.m. Eastern.
You can't plug it enough, Matt. We want everyone to tune in, of course. And as you see that rebound taking place for Bitcoin, you are seeing the benefit, reaping the reward of that crypto-related equities in pre-market trading. The likes of Marathon Digital up 7.4%. Riot Blockchain is up nearly 6 percentage points. So a lot of that complex is doing well on this Tuesday morning as the U.S. gets back from that long holiday weekend. Now, it's not Merger Monday because it's not even a merger agreement and it's not a Monday, but you are seeing a lot of deal action in the airline space, of course, when it comes to Spirit. JetBlue really wants to buy this company, wants to outdo rival Frontier Airlines bid, and as a result, it's continually raising the price for Spirit, up now to $33.50 a share. That's $2 higher than the offer they made just a few weeks ago. As a result, Spirit is up nearly 13% in early hours, trading around $24 a share. But really, a lot of the travel complex is doing well today. Any deal action aside, Anna, all the airlines and cruise lines are amongst some outperformers in pre-market trading, including United, up about 3.4% before the bell.
We had a lot of good content coming through from the IATA conference in Doha just yesterday. Worth looking up on the Bloomberg terminal if you were out of the office yesterday. A lot of conversation there about aviation. Stocks Europe 600, then back to Europe, Kaylee, and we see European equity markets moving higher, up by around 1%. We went higher yesterday in Europe. More to go, though, it seems, finding this risk appetite from somewhere, despite all of these headlines coming through now about who is calling a recession and when. The euro is gaining. The pound is gaining. This is all really part of the weak dollar that we're seeing as a result of a risk on tone in markets today. So the euro up 0.6%, the pound up 0.5%. More comment on rate hikes and fragmentation tools there with the euro. The pound, interesting that we heard from the economist, the chief economist at the Bank of England. He said that the BOE will sacrifice growth to achieve inflation targets, which is an interesting statement, a candid statement to make at this point. And natural gas, keep watching the natural gas price. This is the European benchmark as we continue to watch Russia turning down the amount of gas that it will send to Europe. And over in Qatar, we've witnessed lots of conversations about just who and at what price and how much investment there needs to be in Qatari LNG, Kaylee.
All right, well, speaking of commodities, it's not just natural gas moving higher. Oil also is ticking higher this morning as investors continue to weigh the demand and supply outlook. Joining us now from the Qatar Forum Economic Forum is Bloomberg's Haslinda Ahmed with the Vitol CEO. Has?
Well, that's right, Kaylee. Russell is, of course, the man to speak to. Vitol, it is the largest independent oil trader here, giving us his perspective. Russell, I mean, how tight is the oil market right now?
So we've had obviously a very strong start to the year. Things are positive across most supply situations coming into the year, oil and gas, and since the Russian problem, things have obviously tightened further. Prices have moved up, and we're at a level now where consumers are really struggling, really suffering, and what we're worried about is how this then plays out for consumers and the economic consequences of these high prices. So we're beginning to see a little bit of demand drop at the edges because of the high prices.
So where do prices go from here? Some are already touting 150, some say perhaps 200 in the coming months. Do you see that happening?
I think we've got more oil arriving from the OPEC Plus agreement over the next 3 months. The US is producing more oil. The SPR is making more oil available. So I think those rises are less likely today without geopolitical problems.
We have President Biden heading to Saudi Arabia in the middle of July. What kind of conversations do you think will transpire, and what kind of response are you anticipating from Saudi Arabia?
I think that's the $64,000 question. I don't know. I don't know that we can quite read into the visit exactly what's going to happen. Obviously, Saudis are incredibly important to the future of supply and demand because they're holding the spare capacity today. So it's an important meeting and important to read the tea leaves of how the Saudis react to the wider price problem across the world.
Well, let's talk about the spare capacity. I mean, the sense out there is that Saudi Arabia and the UAE can produce 1 million barrels more. Is that accurate?
Yeah, I think we're going to find out because there's going to be more call on that oil over the coming months, and the OPEC agreement allows Saudi to go back to about 11 million barrels a day, and we're going to see how comfortable they are at that production level and to what extent they've got room beyond that as we go into winter. So I think the market's a little bit concerned that we're running out of spare capacity. It's beginning to factor that into prices today.
Well, what's your own sense? Can it produce any more than 1 million barrels a day? How much clarity is there in your conversations with the people within the industry and in Saudi Arabia?
I think it's reasonable to assume somewhere between 11 and 12.
That's it?
11 and 12 million barrels, right. Yeah. So up to another million from where we are today.
We had your head of Asia saying that the U.S. is likely to turn a blind eye to Iranian oil coming to the market despite the lack of a nuclear deal. How are you thinking about that?
I don't think anything's really changed. Volumes of Iranian exports are primarily going to markets that still have relationships with Iran. To be very clear, it's certainly activity that's sanctioned as far as we're concerned, and touch those products or those commodities. And I think merely the point was that as we go forward here, there is a chance still of a JCPOA renewal at some point in the next 6 to 9 months. And until that period is hit, we're probably going to plateau at the kind of levels that we're at.
A lot of attention is also being focused on China and its emergence from COVID. When China does emerge, what kind of demand are you anticipating from China, and how will that weigh on demand and supply in the energy market?
So it's had a very tough 2Q from a demand perspective and a lockdown perspective. So there's quite a bit of growth to bounce back, and obviously the speed at which that comes is quite a concern for the market. Refining capacity has been held back a little bit. Product exports have been held back a little bit so that they can look after their own supply and demand whilst they're in this difficult situation with both COVID and the international supply picture. And so I think we'd certainly expect demand to increase by at least 1 million barrels a day in China, and that will be supportive for international prices.
How about in terms of demand for Europe and the US? We have expectations of a slowdown in both economies.
Yeah, I think the real concern in Europe is really going to be around diesel this winter. As we move away from Russian diesel, where are we going to find adequate diesel supplies? So the market's got time to adjust and move supplies from other continents towards Europe. But I think that's one of the things that's really driving prices, is the concern around diesel.
Supplies remain tight and prices remain elevated. There you have it, Russell Hardy. Anna, handing it back to you.
Linda, thanks very much. Bloomberg's has Linda Armen in Qatar with the Vitol CEO, Russell Hardy. Coming up on the programme, Unresolved Matters, Elon Musk speaks to Bloomberg about his bid for Twitter. We'll bring you some of that conversation. This is Bloomberg.
Diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Now, we all know Kaylee, what has preoccupied Matt over the weekend, and that was being stuck to his Bloomberg terminal, looking at the volatility in crypto. But Kaylee, where does the conversation go from here then, in terms of setting up what should be a really interesting crypto show later in the day?
Yeah, 1 p.m. Eastern time with Matt and I, really looking forward to it. I think the question really is the bottom in now? Have we seen the worst of the deleveraging, of the selling pressure, the forced selling in crypto, and is the rebound we've seen over the last couple of days sustainable? Anna, we're going to dig into that, hopefully look at some technical charts coming up later this afternoon.
So lots more on crypto still to come. Let's get back out to the Qatar Forum, the Qatar Economic Forum. Bloomberg's Francine Lacroix standing by with Jenny Johnson, Franklin Templeton Investments CEO. Fran.
Yeah, thank you so much, Anna. I am delighted to be joined by Jenny Johnson. Jenny, there's so much going on. We're in Qatar. If you look at the markets, there's a lot of deployment of capital that maybe isn't going to the places where it would have gone 6 months ago. How do you see the active management side of things?
Well, look, active management thrives in volatility, and we're having volatility for sure. I mean, I think what we've had in the last decade, honestly, since the financial crisis, is where governments were printing money. There was no place to put it, so you were throwing the equity markets and everything went up. And now what's happening is you're going to have to be discerning about where you're deploying your capital.
So do you see active management back with a vengeance, and it's here to stay?
I do, absolutely.
What does it mean for fees?
Well, so look, you have to get... You have to generate value, right? And if you look in the private markets, I mean, the fees that the private markets have gotten they're huge compared to a public equity active manager or passive. On the other hand, they've generated value, right? So, and as companies are waiting longer to go public, and that growth trajectory is all being captured in the private markets, they've justified their fees. Having said that, the top performing private equity to the bottom performing have had like a 20% differential return. So picking the right manager is also really important.
So, and this is one of the conversations that you had with our Danny Berger over in Berlin at Super Return, right? That some of the private market is now back, but there's concern about liquidity. How do you see the market overall developing? Are we going to see a gyration towards growth continue?
Look, anybody who could deploy capital for a longer term have had the benefit of what we've called the illiquidity premium with private markets. The challenge now is because you do have companies waiting longer to go public, and you do have banks who aren't lending, they're not using their capital the same way to lend, so it's created the really private credit markets that really the average investor has been left out of that. And that's a problem. So, what I talked about there is we have to figure out responsible ways to bring the private markets to really the average investor. And so a couple of ideas. So one, I think in like a retirement program where you have a managed account and there's an allocation within that fund to private markets. We actually ran this in our solutions group, and if you allocated anywhere from 10 to 30% of a managed account to real estate or private credit, we didn't even do private equity, you got anywhere from 1 to 3% additional kicker in return per year. That's significant over a retirement lifetime.
Jenny, is this money that's coming out of the public markets because of the volatility that would put in there, or is it extra money being pumped into the system?
We were focusing on in the U.S. they have 401k plans that people take money out of every paycheck and put in. So really it's kind of new money that, and that also is part of what makes it helpful is there's always money flowing into the vehicle. So we think that's actually a great place to deploy it.
We had Elon Musk saying, look, a recession is probably coming. He didn't put a timeline on it. Are you expecting a recession, an ugly, like deep, ugly recession?
I don't know if it's a deep, ugly recession. I think one of the challenges is you've got the Fed trying to raise rates to cool off demand, right? And that's normally what you do, and when you have inflation. The problem is we have some real serious supply shocks. The war, China's zero COVID policy, honestly, climate change. Some of the big climate events, we had a food crisis prior to the war, and then deglobalization where people are diversifying their supply chains, which probably means that things get more expensive. So, and those are choppy kind of supply shocks. So I think it's we're going to have kind of a tough period here. I wouldn't be surprised if you had a little bit of even potentially some stagflation.
So for markets, it's a nightmare. Do you go to
markets
cash?
And stuff. You've also taken markets always predict the future, right? So you've actually had a lot of it in the equity markets. Probably have a bit more, but they'll be the kind of the first to come out of it, I think.
Does it mean that actually there are valuations for financial companies that crop up that are attractive for you to buy, for example, in an M&A transaction?
So we approach M&A by looking at it, where do we have a gap in our products? And, you know, look, timing, you never can time that perfectly, so it's about filling gaps for us. And in some cases, it's things in fintech. We actually now absolutely have the broadest capability of any global asset manager out there, venture capital all the way to passive. And so we feel really good with the companies that we have.
Do you think the industry, so maybe outside yours, will continue consolidating?
I think that there's going to be more consolidation in the industry, partly because I think big distributors are talking about wanting to work with fewer partners, because it's just as expensive to do risk management and due diligence on a big company as it is a little company, and it costs you the same to deploy those resources. So it's kind of easier to work with bigger companies who have independent boutique capabilities. Franklin Templeton has 15 independent investment teams on a risk management platform supporting $1.4 trillion in assets.
Jenny, thank you so much for joining us today. That was Jenny Johnson, of course, the Chief Executive of Franklin Templeton. With that, Matt, I'm going to send it back to you, New York.
All right, Francine, thanks very much. Francine Lacroix there with Jenny Johnson. Really fantastic interview. The idea of giving average investors more access to private markets, I think, is compelling. As Jenny said, it would boost your portfolio 1 to 3%, which is significant over the lifetime of a retirement account. Coming up, unresolved matters. Elon Musk speaks to Bloomberg about his bid for Twitter and much, much more. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, Tesla's Elon Musk told Bloomberg there are still unresolved matters about his bid for Twitter, and he sees a recession more likely than not. He spoke with Bloomberg's editor-in-chief, John Micklethwaite, earlier from the Qatar Economic Forum in Doha.
There are still a few unresolved matters. You've probably read about the question as to whether the number of fake and spam users on the system is less than 5%, as Twitter claims, which I think is probably not most people's experience when using Twitter. So we're still awaiting resolution on that matter, and that is a very significant matter. We're awaiting resolution on that. And then, of course, there is the question of will the debt portion of the round come together, and then will the shareholders vote in favor? So I think those are the three things that stand in the, that need to be resolved before the transaction can complete.
What about the general state of the economy? Does that weigh on you when you think about this? I mean, you just described it. You have a super bad feeling about the economy. Are you still in that position? I just said to you earlier, Joe Biden has just come out and said that a recession in America is not inevitable. How do you feel about the economy?
Well, I think a recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
Can you set the record straight on one thing, which is this issue about the layoffs? I think you said initially that Tesla, 10% of the workforce would be cut, then 10% of salaried would be cut, then salaried would stay flat and overall headcount would go up. What is the number? I know there's already, I think, been a lawsuit about the 10%. Is 10% the goal to reduce the workforce, or what is the number that we should think about, or that you're planning?
Yes. So Tesla is reducing the salaried workforce by roughly 10% over the next probably 3 months or so. We expect to grow our hourly workforce. It's quite clear that we expect to grow our hourly workforce, but we grew very fast on the salaried side, and we grew a little too fast in some areas, and so it requires a reduction in the salaried workforce. And we're about 2/3 hourly and 1/3 salary. So I guess technically a 10% reduction in the salaried workforce is only roughly a 3.5% reduction in total headcount.
Elon Musk there speaking with Bloomberg at the Qatar Economic Forum a little bit earlier. Now, let's get a look at what we're watching. I'm fascinated by housing markets as I talk to more and more people who decide not to sell because buyers are concerned about higher rates. John Authors wrote a piece on it today. He says, if there's one asset that could come under scrutiny, it is real estate, whose lifeblood is credit. For a double whammy of higher rates and the lasting effects of the pandemic, look to office property. But he also talks in his column, which I highly recommend reading, about residential real estate, as well as the German band Kraftwerk.
Yeah. Right. Okay. Well, definitely worth looking at then. Yeah, lots to look at there. I'm watching the UK rail strikes taking place today. This is the biggest strike in some 30 years, in 3 decades. Takes place today, Thursday and Saturday. Will this spread into other areas of the public sector? Criminal trial lawyers, or barristers as we call them in the UK, also on strike. So a big focus on labour markets here in the UK. That is it for this programme. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This entire problem with inflation and what may or may not be a looming recession is a self-inflicted wound.
Really what the Fed should be saying is we're not targeting 2% inflation because 2% inflation is in a normal environment.
What they laid out in their projections was essentially the absolutely perfect soft landing scenario.
Obviously, a recession will happen at some point.
If you think that we have a recession in 6 to 9 months, the downside from here is substantial.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a Tuesday, a holiday-lengthened work week. We're thrilled you're with us. John Farrow, a much-needed true vacation, and Kaylee Lyons in for John Farrow through the week, and that is a good and beautiful thing. Lisa Abramowitz, I want to stop the show, and what I learned on my sojourn of a 4-day weekend is it's real simple. Inflation is here, and it's here in spades.
That's what Janet Yellen seemed to say, and that it's going to continue for the remainder of this year and after. Increasingly, when I look at the equity notes, it's not about whether there will be a recession, Tom. It's about how deep that recession will be and how much is being baked into equity valuations already.
The measurement of recessions, 8 ways to go here. We'll discover that across the arc of this week. A little bit less economic data maybe than in normal weeks. But Lisa, I mean, we can play this game all day. It's a new game. The price of milk on a moving average study is up 66% off of the pandemic lows. And Lisa, everybody's got their own story on inflation. What is the story for Jerome Powell?
What is the story for Jerome Powell as he heads to Washington for testimony in front of the both Senate tomorrow and then the House the day after? How can he talk about combating it with a sledgehammer rather than a scalpel? Because this is increasingly the question, what damage do they have to do to the economy and to the labor market in order to get inflation, in order to get the price of milk down to something more reasonable for a lot of people, Tom.
And what's amazing here, Lisa, is, you know, before I get to Kaylee and the world she's living here, I'm doing some math here on what you care about, which is Manhattan luxury rents. They move 5 standard deviations. Lisa, it's not only... It's not only the new inflation, it's the rate of change, the speed, the rapidity of it. We've moved 5.1 standard deviations on Manhattan rent, that according to Miller Samuel.
As relatable as luxury housing in Manhattan is to the rest of the nation and frankly beyond, this is just one measure of a whole host of issues that we've been looking at with housing. And this is a broader issue, not just Manhattan or South Beach in Florida issues, but how quickly does it roll over in order to really see some of the softening in some of the inflationary inputs into rent. And that's an issue as mortgage rates go up to 6%.
I mean, we got to look, Kaylee Lyons, at some of the data coming in. It's sort of a nudgy day in the data, but Kaylee, did you survive the the weekend with what BitDog did.
Well, I definitely was glued to the price action all weekend.
It was
Tom,
amazing.
the other thing I was doing over the weekend was moving to Brooklyn because I literally got priced out of Manhattan, Tom. So it's a very real thing. I certainly have felt it. Lisa was talking about, though, what the ramifications are going to be of getting inflation under control. I thought Larry Summers' remarks from over the weekend, 5% unemployment for 5 years, he says, is what is necessary. Is that something that the Federal Reserve is going to tolerate to get prices in check?
I'm glad you bring that up. Lisa, let's talk about that. Kit Chooks writing from Athens this morning with SocGen, of course, and he equates off Phillips curve that Summer's 5% story is 10 million people looking for work. Is that a social policy we can do? I don't think so, Lisa.
I don't think so. I don't think so either. And a lot of people pushed back about whether that would actually be necessary, and there was a lot of controversy over his comments. Not only 5% for 5 years, it could be 6% for 2 years, and then going back down the other years, or 10% for 1 year. It doesn't matter. These are not feasible numbers, and that's the reason why you see Joe Biden coming out with possible proposals to spend. Really, the issue is there any appetite for either fiscal and monetary policy support at this issue, at this venture? And I don't think that there is, which is one reason we're seeing bear cases that look a little more extreme in certain
Joe
cases.
Matthew to join us from Washington here, I believe, in a bit. Let me do the data check right now. It's a lift to the markets. We sort of felt that over the last 4 days with the Dow up 65 points. Good morning, John Farrow. It's always important to quote. The Dow up 479 points, I should say. SPX up 65 points, giving me a 1.8% NASDAQ move. The VIX at 30, that's a big deal, 30.24. A better stock market with a yield elevated 3.27% on the 10-year. Oil lifts, but nowhere near that 124 Brent level, 116 on oil. And dollar churning here this morning. I'm watching yen. 135.47. We need to get briefed out in a 4-day weekend. She canoed like 40 miles this weekend. Lisa Bramwood's briefing.
I love it. Canoed into luxury housing. I'm trying to put all of the images together that Tom puts on me. 10 a.m. This is what I'm looking at. Existing home sales are expected to come in much softer. A big decline.
Really?
We have seen this. Lower volumes of sales. When does it translate into lower prices for those homes? Because that has not happened yet. We did see from Capital Economics that is the expectation that we will get start in a softening of prices. But how long does it take before it really bleeds into the rental picture and to the broader inflationary reads? Today we hear from Richmond Fed President Thomas Barkin, as well as Cleveland Fed President Loretta Mester. How much do they signal that the market's gotten ahead of itself? How much do they have to ratify what the market is currently pricing in terms of a quite hawkish monetary policy path for the Federal Reserve? And at 7:50 p.m., I got to say, going back to the yen, Tom, this is what I'm most interested in. The Bank of Japan monetary policy meeting minutes come out for the month of April. How much do they talk about the weakening in the yen, the fact that we're still near those record lows, or at least going back to the early 2000s, given this policy divergence between Japan and the rest of the world?
We got to stop here, folks, because this is off the radar this morning. I want to get to Russ Kostrich, but Lisa, your chart on radio, it's real simple. You've got a controlled chart, and then in March it breaks, and it's nothing but a weaker yen. And I agree, Lisa, in international economics, this is the debate right now.
And it's certainly what a lot of traders are trying to position for, fighting the Bank of Japan, because this does feel completely unsustainable. But they're going to move at their own pace. Do they give any tea leaves in these meeting minutes about when they might move or what the threshold will be, Tom?
Yeah, Twitter with a headline out moments ago. I'm trying to get that out right now. I saw it, and then it disappeared in the vast gerbil making that we do. Twitter files proxy statement for special meeting, and of course that's off of Mr. Musk's interview with our John Micklethwaite that we saw in Doha here in the recent hours. Finally, Russ Kostrich with his portfolio manager, BlackRock Global Allocation Fund. Russ, what's the dynamic right now of allocation? Are you guys really thinking hard about new reallocations, or is it stasis?
Good morning. It is stasis right now. Tom, as you know, we've spoken about this in past broadcasts. We brought the risk in the portfolios down pretty substantially at the end of 2021, and we've kept it down. And practically what that means, we've been running a very light position on bonds. We've been lightening up on the equity side. We have a lot of cash in the portfolio. It's been what you had to do this year, because obviously, outside of natural resource stocks, there are not a lot of things in the green. And while I think that the market is a lot cheaper and we're in the process of making a bottom, This is a different type of market. It's a market where the Fed is working against you, financial conditions are tightening, and that means you need to be patient.
And Russ, you view long dollar as the best equity hedge. For how long? At what point do you see this kind of losing its luster in terms of a hedge?
Yeah, Lisa, it's a great question. It has worked very well year to date. The dollar measure, the DXY, is up around 8.5%. I think the reason it's worked is because the source of risk for equities, more often than not, has been the Fed. And when you have these days when there's a rate spike, when rate volatility goes up, you've seen the dollar move up as equities have moved down. Now, is that going to be as effective going forward? Maybe not. And part of the reason is it's not just the Fed. As we've seen, there's pressure on the ECB, there's pressure on the Bank of England, there's pressure on the Bank of Australia. A lot of countries right now are playing catch up when it comes to getting inflation under control.
Well, you mentioned the Bank of England. The chief economist over there, Hugh Pill, out this morning saying that he will sacrifice growth in order to cut inflation. And that seems to be the trajectory that the Federal Reserve is on as well. That's the reason why Mike Wilson over at Morgan Stanley, for example, says this market is not yet accurately pricing in the economic contraction. He says 15 to 20% more downside to around 3,000 on the S&P 500. What's your view on that?
We're not that bearish. I certainly would acknowledge you can have more downside. As I said a moment ago, this is not going to be the type of, 2010s market turnaround where you have one day and you can declare the bottom. Having said that, I do think we have to take into account what's already happened. You've already seen that valuations, depending upon the market you're looking at, are down 30 to 40%. So multiples have already corrected quite substantially. The other point is, we're debating recession, no recession. It's also worth debating if you have a recession, how severe is it? Because that will determine the path of earnings. And our view is even if you were to get a recession, it's likely to be a very mild one. So the hit to earnings is probably not as severe as some are discounting, which means I think the 3,000 call is probably a little too aggressive.
Russ, thank you so much. Russ Kostrich with us. Really good to hear from him with a broader allocation strategy at BlackRock. Lisa, Ed Yardeni is going to join us today. And we went out, we got the surveillance Rolodex out and said, who has gray hair and actually remembers inflation? There's not many cards in the Rolex, Lisa. I'm sorry,
I just want to issue up an apology to Ed Yardeni if he listens. He's listening and he thinks that those are his qualifications. Seriously?
Oh, come on. He studied with James Tobin at Yale. Hey, he's a giant. We got to get Yardeni. Lisa, express inflation in the Bramowitz house. I'm going to express it in the bill I got this weekend from the Levi's store to keep afterthought in wardrobe of 501 jeans. What was the inflation story at the Abramowitz house this weekend?
Buying groceries for the weekend and seeing a bill that normally was $110, $170.
Exactly.
That to me, it's very basic.
Exactly. It's real. Okay.
Going to whole paycheck.
Lisa, what was great about
paycheck,
folks, Kaylee Lines moving to Brooklyn, the moving trucks extended the entire length of the Brooklyn Bridge. It was amazing to see 4 or 5. How about the inflation of moving, Kaylee?
Tom, don't even get me started. Not just the movers themselves, the new furniture, the groceries to restock, the fridge, the new cleaning supplies. I mean, I have spent so much money on Amazon in the last, call it week.
Exactly. Isn't that true?
Oh, man.
And what Jesse does there, folks, he hides it in a separate sub-account that you don't see for 3 hours. Good morning to Amazon, the Lines household, making you do better this week. Stay with us. Ed Yardeni coming up later. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Elon Musk sees a recession in the U.S. in the near future. The Tesla and SpaceX CEO spoke to Bloomberg News editor-in-chief John Micklethwaite.
A recession is inevitable at some point. As to whether there is a recession in the near term, I think that is more likely than not. It certainly isn't. It's not a certainty, but it appears more likely than not.
The interview with Musk was part of the Qatar Economic Forum in Doha, powered by Bloomberg. President Biden says he hopes to decide this week whether to move to suspend the federal gasoline tax. That could ease the impact of soaring prices at the pump. The move likely would require congressional sign-off and could not be taken via executive action. U.S. gas prices now average $4.98 a gallon, just short of a record set last week. Russia warns that 2 Americans captured while fighting for Ukraine could face the death penalty. A spokesman for President Vladimir Putin tells NBC they weren't likely to be protected by the Geneva Conventions as prisoners of war. Moscow considers the American so-called soldiers of fortune and not part of the Ukrainian army. And in the UK, the biggest rail strike in 3 decades is underway. Unions rejected a last-minute offer from train companies. Some 40,000 workers are walking out today, Thursday and Saturday. That's bringing commuter services to a halt and threatening to cause transport chaos in London. And Mondelez has agreed to buy Cliff Bar as part of a plan to boost its snack business. The company will pay $2.9 billion for the U.S. organic energy bar maker. Cliff has operated for almost 30 years and is family and employee-owned. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
I was talking to Larry Summers this morning, and there's nothing inevitable about a recession.
The President of the United States there on Mr. Summers, and a lot of vetting out there. Lisa, do you think it's tangible of talking within a normal change of an administration that Lawrence Summers could find a warm spot in the Biden administration?
That would be pretty controversial. Can you imagine someone coming in who counts basically the likelihood of a 5% unemployment rate for the next 5 years is highly necessary? I mean, try selling that to the American people.
We're going to get to that right now, but first, a public announcement by Bloomberg Surveillance, of course. It's the Lines Moving Foundation. Send in your contributions as you choose. We'll be taking contributions over the phone. We'll be doing that starting at 2 p.m. this afternoon as Lines moves to Brooklyn. Right now, Joe Matthew with us. He doesn't know where Brooklyn is. It's Brookline, Brooklyn, whichever it is, and he joins us in Washington as well. Joe, seriously, Lawrence Summers has done a lot of public service. They love him, they hate him. I don't want to get into that. But is that the kind of name bandied about to reinvigorate the president's administration?
Boy, that would be something. I don't know that Larry Summers is looking for a job like that, but I think that we do have to step back from this story a little bit and actually look a bit more closely at what the president said. If we kept playing the tape there on the beach as he was talking to people yesterday, he went on to say, after the not inevitable remark, I think we're going to be able to get a change in Medicare, he said, and a reduction in the cost of insulin. It's not that Joe Biden thinks he knows more than Wall Street or knows better than Larry Summers or Elon Musk for that matter, but he thinks there's still an answer to this, a legislative answer that could come in the form of reconciliation, something Democrats can pass on their own, a stripped down version of Build Back Better. I know you're tired of hearing about it, but it looks like they will take another swing at that ball this summer. I don't know if that does anything, though, to prevent a recession. For those of you across the nation, and I know you've got your own Brook cities as well and international, we're making jokes about this, but there's Brooklyn, there's Brookline, and I guess there's Brookland as well in Washington, D.C. Those span a lot of different economies, Joe. That's true. And I want to talk about who's not being talked about, which is the broader middle class right now. How bad is the agony for the broader middle class, and what can the politicians do about that agony? I'll add Brooklyn, Connecticut, where I once lived as a young boy, and that is a working class area. It's agriculture, it's manufacturing. This is not the New York side of Connecticut, and people go into the store over the weekend, in many cases, are buying chicken, they're buying hamburgers, they're leaving the steak, or maybe they're splitting the steak. I'm not sure exactly how that goes, but this is so real that you've got a president who's out there talking about this on a daily basis with a war raging, with a pandemic that still has not been controlled. It's the #1 issue here, and if he does what Larry Summers is talking about, 5% unemployment, you can cut that into a couple of different things, by the way. A couple of years of 10%, he said, maybe it's 3 years of 7.5%. That's a wipeout for Democrats. That is not a story that you can tell going into 24 for re-election.
Joe, what does prescription drugs and the prices therein have to do with substituting chicken for beef?
Well, that's another issue we're talking about here, headline versus core. What prices can they actually affect? We heard from Jay Powell talking to Mike McKee last week, who said, look, there's not a lot we can do about oil and food prices here, but we're going to go after what we can. And that's been the story from the White House, trying to defer to the Fed, but also doing what it can through legislation, and it does require legislation. There's not very much that this president can do through executive order. That includes the idea of gas rebate cards they're talking about, or a suspension of the gas tax. That's got to go through Congress, and it's just not clear that the votes are there.
How much appetite, Joe, is there truly to do some sort of fiscal spending package at a moment when a lot of people are still pointing to the fiscal spending of last year as something that turbocharged the inflation that we're seeing today?
Right. It looks like a deal breaker. To tell you the truth, between now and November, I just don't see the appetite. The House can do a lot of things with its relatively slim majority for Democrats. The Senate is another matter, though, and unlocking a lot more money to stimulate the economy is not going to get a yes vote likely from the Joe Manchins or Kirsten Sinemas of the world. Remember, we don't even have legislation to talk about here. These are concepts right now, Lisa.
And finally, while we're talking about concepts, we heard from Elon Musk, the CEO of Tesla and SpaceX, at the Qatar Economic Forum in conversation with Bloomberg's editor-in-chief, John Micklethwaite, talking about 2024 and whether he'd be supporting President Trump in that race. He said he's undecided as to who he would back. Do we have to get through the midterms before we have a clearer picture of the presidential race coming about 2.5 years from now, Joe, or are we going to start getting some clarity on that sooner?
Well, you just said it, 2.5 years. Yeah, we need to wait a minute here. Look, a lot of people are trying to gauge the Trump impact on the midterms, and we have a couple of big ones as well. So keep an eye out for Liz Cheney in a few weeks. We haven't resolved the January 6 hearings. We've got the next one out today. It's unclear if Joe Biden's going to run. It's unclear if Donald Trump is going to run, although he's certainly acting like it. But yes, we have to get through the midterms, and we have to see where the economy is going to be next year and what hope this current president might have for a second term. And my goodness, right now it's not looking great. A lot of folks think that he's not even planning on that because of his age, but he says publicly he would love to run again against Donald Trump.
Joe Matthew, thank you so much for the update. We'll speak to you again in the next hour as well. Lisa, as you well know, there's a sell side tone to every note. There's a Mike Mayo feel to a banking note. And there's that Oliver Chen writing up the recession this morning. And Lisa, it's a classic Oliver Chen note with a lot of verve at Cowen about Ulta, which is beauty products. And he is heated that it's recession resistant. And there's a moat around it because of the sale of lipstick.
I love it.
It's classic Oliver Chen.
Waterproof resistant. You know, one of the tones that I noticed in a lot of notes over the weekend was what's been priced in already. And how much have we priced in a deep recession in certain stocks, and how much have the safest stocks, the discretionary or the non-discretionary rather, basically been bid up so high that that's a no-go zone, that they're no longer safe, that those are the most expensive areas. Increasingly, I'm looking at people pricing in scenarios that are incredibly gloomy and doomy. So at what point do we realize that we've gotten to some sort of nadir here in terms of sentiment, where then we pop? I'm not being optimistic. Don't accuse me of that.
To come back from vacation if you do that.
But you just have to wonder. I mean, how much gloom can people take before you start to take a step back and say what's been thrown out with the bathwater?
Really well said. It's extremely important, folks. This is the heart of the matter as we do surveillance into June and, of course, into July and the 27th meeting. Kaylee, to that point, Mike Wilson over at Morgan Stanley, the recession drawdown already is 60% of the gloom is their math.
Well, and he says it has farther to go. 3,000 is the level he's looking at on the S&P 500. But I would note he's not alone in that. You also had Peter Oppenheimer over at Goldman Sachs saying that the market is pricing in only a mild recession. So it's vulnerable to any further deterioration in expectations. But while you have the consistent, those on the more bearish end of the spectrum, the bulls are still out there. Marko Kolanovic over at JP Morgan says too much recession risk has been priced in. There is a pretty wide divergence on the outlook here, and I wonder how much of it is ultimately going to come down to whether earnings are able to hold up, and we'll start getting a look at that in just a couple weeks' time.
That sets up the debate with futures up 66. Dow futures up almost 500 points, 490.3, and the VIX comes in 0.81 points, 30.22. Please stay with us. From New York, this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance, we say good morning to you. Right now, futures up 67, a nice buoyancy. I think we felt that through the weekend, a better feeling to the tape. NASDAQ up 1.9%, Dow up a solid 500 points with a VIX of 30. And that feeling was there, and the bounce and all that around the recession gloom that was out there. We didn't see that, Kaylee. Lines in for John Farrow. We didn't see that, Kaylee, in crypto. The emotion, Kaylee, of an under 18,000 print on crypto over the weekend.
Yeah, a level that was very closely watched by those looking at the technicals was more around $19,000, and that didn't hold. What's interesting, Tom, is yes, you saw that plunge into levels we haven't seen in literally years, yet you're seeing a ferocious rebound over the last couple days, up 16% on Sunday, up another 4% or so today. We're back north of $21,000. You know we'll be taking a look at that on Bloomberg Crypto at 1 p.m. Eastern Time.
Kaylee's
Got a promo at time.
Oh, thank you. Kaylee's entourage said you've got to sell this. Here's what I'm going to sell, folks. There's a massive amount. Lisa and I live this every day of crypto babble out there. And the show that Bloomberg's put together with Kaylee Line's leadership is really trying to have an intelligent conversation away from the fanboyism of Bitcoin. They're working at that every week. And of course, in the emotion here, Lisa, I saw over the weekend in Korea, they've limited the travel of one blown up crypto operator.
Yeah, this is going to be an ongoing story. I keep going back to what Pete Shear said. We talk about crypto as sort of a side project. How much is it a more central project in terms of the economic ramifications, considering the energy, considering the people who are getting rich quick? I mean, how about all the cab drivers you had who talked about whether they should invest in Bitcoin, Tom, and what that does when it doesn't go up anymore?
We all have a reading process to get briefed, really right through the weekend, reading Saturday and Sunday as well. And part of that is the work of Carl Weinberg at High Frequency Economics with a brilliant note this weekend gauging recession likelihood. Holding up his court in the United States is Rubila Faruqi, who joins us now, the chief U.S. economist at High Frequency Economics. When you hear politicians blather about recession, Rubila, how do you listen to them and how do you gauge the guessing of a recession and the quality of that recession?
Yeah, good morning. Thanks for having me. We're really looking at the fundamentals. We're looking at the economy, and right now there's no real signal about a recession. Having said that, what the Fed is doing in terms of how rapidly they are ratcheting up interest rates, in our discussions, we find that this, it's a very atypical rate hiking cycle, and it's going to have pretty serious ramifications for the growth outlook. The further the Fed goes, and the aim for most central banks right now is to get to neutral. And in our view, getting to neutral is not just getting to the longer term rate that is being, that's set at around 2.5%. but that interest rates are going to have to move higher, and that has, that's going to have pretty significant implications for the growth trajectory going forward.
Rubila, the interest rate story perhaps is the old story. The new story is whether the unemployment rate has to rise to unimaginable levels in order to achieve the price dampening effect that a lot of people are hoping for. What do you make of Larry Summers' idea of 5% unemployment for 5 years or 10% unemployment for 1 year, or some of these catastrophic, unimaginable numbers?
Yeah, and I do think that for the U.S. outlook, we should expect, given what the Fed is signaling in terms of rate increases, and they're also acknowledging it in their forecast, how far up we go and what is acceptable, it's really unclear right now. But in terms of a 5% unemployment rate, that's not really outrageous in terms of what their longer run unemployment rate is. But a 10% unemployment rate, that's where the issue lies, or even going above 5%. Right. So I do think that we're going to see a move up in the unemployment rate. How far up it goes and what the tolerance is still unclear. 4% rising above that is not out of the realm of possibilities.
And Lisa, while you and I are at the grocery store enjoying aisle 6, the 30-year bank rate mortgage did what Julia Coronado was talking about, a print of 6.01% on Monday. To me, Lisa, that is the statistic of the morning.
Especially because we do get a slew of housing statistics that do show a slowdown, but at what point does that translate into something that means a lower CPI inflation read? Rubila, we are looking at rents that keep climbing and will probably keep climbing even as home prices come down, because people are getting priced out of that market with a 6% mortgage handle. How much are you looking at rents continuing to climb and CPI remaining far higher than people expect for far longer?
Yeah, and that's a very major part. We've talked about housing and, the bounce from housing and how that's going to continue to feed into the CPI numbers. And if you see house prices, mortgage rates are going up, demand is going to come down. It's already coming down. But if you see prices, if that doesn't ease significantly, that's going to feed into rents, because people, as you said, are being priced out of the market. So the push from rents, the push from that component is probably going to last longer, for some time. And I think that's going to keep the inflation, especially core inflation, higher than would normally we would expect at this point of the cycle. But, I think what we expect on the services side on the core inflation is that a lot of this demand for things that people have not been able to do over the last 2.5 years or so, I think that is going to abate over time. And what we expect to see on the other side of, let's say, the summer or September or October is some easing of those pressures. But again, like you said, rents are such a large component that it is probably going to provide a lift to the inflation statistics for some time.
Okay, Rubila, so if I'm an average middle-class American, I am looking at potentially the value of the home I own going down, that price moving lower. At the same time, I'm keeping an eye on my 401k, and I see how much my wealth has been destroyed in just the last couple of months. That is likely feeding into the ways that we've seen sentiment deteriorating, and yet you haven't seen the data deteriorating to the same extent. How long is that gap going to hold? Are we going to start to see some real more material deterioration in the economic data and spending, for example?
Yeah, and that's the base cases that for now, we still have pent-up demand for things like, travel, accommodation, going to movie theaters, going to concerts. Those things are going to continue over the next few months. People haven't done these, really engaged on a wider scale in these activities for a very long time. But I do think that once we move past that, and that we not really certain when that's going to happen, but it's probably going to take a few months for that to filter through. But you have people who are households that are facing not only higher gasoline food costs, but also, rapidly higher ratcheting up of interest rates, credit card rates, mortgage rates, and all these things are going to, feed into the outlook. And I do think that, as consumers run down their savings, as they rely more on lines of credit, that those things are going to feed into slower spending over time.
Okay, so how does that come down to your forecast on the odds of a recession, Rubila? Over at Goldman Sachs, they say 30% chance this year, 48% chance over the next 2 years. What do you say?
I do think recession risks are going up each time the Fed moves, and the Fed moves very aggressively. You know, we went from 25 to 50 to 75, and we're expecting another 75 in July, and probably another 250 basis points after that. So that really is going to slow the economy down in a very, very substantial way. So the recession risks are definitely going up. 30% recession risk is not out of the realm of possibilities. It's a pretty reasonable estimate, and I think if the Fed remains as aggressive, I think those recession risks rise with each move.
Rubeela, thank you so much. Greatly appreciate it. Rubeela Farooqui with us with High Frequency Economics today. And Lisa, I look at where we are in inflation, and of course, we haven't talked much about it. Good morning to those of you across the United Kingdom with real serious issues. A rail strike pushing back 30 years. And the partition, Lisa, it's less about a more higher paid rail driver than it is about station staff and railway cleaners. And you put out the Wall Street Journal article today, and it's in all the zeitgeist, including Bloomberg, of inflation and what it means for teachers or nurses or railway cleaners and staff. Some of these people are just giving up given the speed of this inflation.
And there's some idiosyncratic issues depending on the field and depending on some of the dissatisfactions. With respect to what I was talking about with this Wall Street Journal story, is that there has been nearly a 3% drop in the workforce of teachers and support staff in public schools around the country. And that means about 300,000 people who decided not to come back to work. I hear this all the time, Tom, and it hits really close to home with teachers leaving the workforce. It's been a really exhausting bunch of years. They are not paid as much. People are exhausted. There's been the scars of the COVID crisis with kids that people still don't talk about to the extent that a lot of people are living it, Tom.
And of course, there's lots of legislation on this, and this folds into what we're talking about with economics, finance, investment. Kaylee Lyons, just one of the proposals, this from the Very Liberal Economic Policy Institute, of New York City minimum wage going out to an Amazon-like level, which is $15, very different than Virginia, very different than other parts of the country, out to a stunning 21.25. You wonder how Jerome Powell has to adapt to that.
Yeah, does that mean kind of that wage price spiral that everyone so fears, Tom? But the fact of the matter is there is a difference between the minimum wage and a living wage, and there is a difference between a living wage, especially in this kind of inflationary environment, when you aren't seeing real wages going up enough for people to keep up with the higher prices at the pump, the higher prices at the grocery store. Tom doesn't want to buy beef anymore because prices are high. And Tom, you're a TV news anchor. For people who make hourly wages, minimum wage, what are they doing in this kind of environment? It's got to be really difficult.
On the flip side, and Tom, weigh in on this, but we actually see certain small businesses curtail hiring plans because they can't afford the wages that people are demanding.
These are
is
the
that
dynamics.
the path? Right. Is that the path to higher unemployment? How painful is that when a lot of these companies say, we just can't even provide the services because we can't hire the people at an affordable cost?
You can't. First of all, if you've never faced this before, I want to make clear, this inflation we're talking about is different than what I knew in my youth. The railway strike in London is different than what John Farrow knew in his youth as well. It is original territory, and we'll give you some good perspective on this. Again, Ed Yardeni will be joining us. Coming up in the 7 o'clock hour, our John Micklethwaite in conversation with Elon Musk.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden has reiterated that a U.S. recession is not inevitable. Biden spoke to reporters after a conversation with former Treasury Secretary Larry Summers. Summers says there's a significant chance the U.S. will find itself battling stagflation. Bloomberg's learned that the European Union's 27 members are set to formally grant Ukraine candidate status later this week. That is a highly symbolic step on the long path to becoming an EU member. EU leaders will discuss Ukraine's membership bid this week. In China, the coronavirus outbreak is shifting to its south coast. A flare-up in Shenzhen has triggered mass testing and a lockdown of some neighborhoods. Meanwhile, gambling hub Macau is racing to stop its first outbreak in 8 months. And it is the latest move in the battle over who will end up owning Spirit Airlines. JetBlue has raised its offer to buy the bargain carrier, valuing Spirit at about $3.7 billion. That follows Spirit's decision to delay a shareholder vote on its pending deal with Frontier Airlines. That vote is set for June the 30th. Elon Musk says that Tesla will cut its salaried workforce by about 10% over the next 3 months, but the number of hourly workers will keep growing. In an interview with Bloomberg News' editor-in-chief John Micklethwaite, Musk said Tesla grew very fast on the salaried side. The interview was part of the Qatar Economic Forum powered by Bloomberg. And Mondelez has agreed to buy Cliff Bar as part of a plan to boost its snack business. The company will pay $2.9 billion for the U.S. organic energy bar maker. Cliff has operated for almost 30 years and is family and employee-owned. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Last year, our unconventional oil production in the U.S. grew by 25%. We expect to grow 25% this year. I think thoughtful conversations about investments across that whole portfolio of solution sets needed to provide affordable and reliable energy while reducing emissions is the path forward.
Darren Woods, he is Chief Executive Officer of the First National Bank of ExxonMobil, was what it was called over the years. To give you perspective on Exxon, consider $306 billion coming down to an 18% EBITDA of $55 billion. I'll let Kaylee Lyons figure out what that means per day that Exxon is minting now at $5 a gallon gas. I should point out, am I right, Lisa? Gas is a little bit lower maybe than the last couple of days?
Yeah, it's come down a little bit, and this comes as we hear a growing number of proposals from Washington, D.C.
Right.
My favorite aspect of the gas rebate card story is that this administration has struggled to get enough cards because of the chip shortage, so they haven't been able to produce as many cards in order to get the rebate. It just shows how multifaceted this problem that we're in really is.
Yeah, very good. Matt Miller just emailing in, Matthew Miller noting it's Tuesday, Tom, you idiot. Thank you, Matt Miller, for that. And that means a crypto show today. I was wrong, not tomorrow. Kaylee Lyons, there's a lot to talk about on price of crypto and the agony out there. Seriously.
Yeah, there definitely is, and whether or not the bottom is in fact in at this point, Tom. If the rebound we are starting to see take shape is actually sustainable, if this is a viable dip. But Tom, when we talk about wealth destruction, yes, $2 trillion was wiped off the market cap of U.S. equities last week. There has been major wealth destruction in crypto as well, and a lot of retail is in this market. That's not great for sentiment, and there could be ripple effects stemming from crypto to broader financial conditions, which is something that Ben Amons over at Medley Global Advisors was talking about this weekend.
Bloomberg, as a hydrocarbons team, truly second to none. Javier Blas giving immense perspective there. And also Julian Lee, to say he's a Bloomberg oil strategist, barely mentions his academics and excellence out of London. Julian Lee joins us this morning. Julian, I love your terse essay about Exxon, big oil, and the little guys running the gas stations. They're the blame right now. Why is Exxon on down to the petrol station outside London? Why are they not to blame for these high prices?
Well, I mean, you have to look at this globally. There's an awful lot of pressures on the prices. I did an analysis of petrol prices here in the UK. About 47% of what we pay at the pump at the moment goes straight to the government in two different taxes, and including a tax on a second tax on the first tax. They take almost half. Another round about a third, maybe a little more, is the cost of the raw materials, the crude oil, the biofuels component that go into making the gasoline. And that in the end leaves about a margin of something like 16% to cover the transportation costs, the refining costs, the distribution margin, the wages of the people who work in the refineries and drive the trucks and work at the pumps. And that's really not where the problem is. The problem is that we are suffering shortages of both gasoline and diesel. The supply isn't there. The demand is growing more quickly than anticipated on the recovery from COVID. And, you know, still everyone looking at perhaps staycations rather than flying at the moment.
That's where I wanted to go, Julian. How much of that demand destruction are we actually seeing aside from big policy prescriptions in Germany, such as please stop using so much gas?
Yeah, I mean, part of the problem is that at the moment, we're really not seeing enough of the demand destruction that we need to balance the supply and demand of these fuels. And this is one of the problems, I think, that governments face, and whether it's the Biden administration in the US or whether it's our own government here, there's a lot of pressure to cut taxes on road fuels to help ease the pain. The problem with that is that if you start cutting the price, all that does is stimulate demand. And if prices are rising because there isn't enough supply to meet the demand, the last thing you want to be doing is stimulating even more demand. So governments are in a real bind on this.
Julian, that's exactly where I wanted to go, because we did hear about this also from the United States. We've heard about this from the United Kingdom as well, about removing some of the gas taxes, which frankly are a lot less significant than over in the United Kingdom. How big is the swing factor in terms of demand? In other words, how low are inventories to make even just a small decline in demand make a real difference in terms of bringing down prices?
Well, US gasoline inventories at the moment are at their lowest for this time of year for, I think it's about 7 years, so since about 2015, and they're heading lower as they traditionally do at this time of year. The problem is that they started the summer driving season at a relatively low level anyway, and you're talking about, I think the federal tax on gasoline is about 18 and a half cents a gallon. That's not a big drop in price, really, in terms of the overall $5 a gallon price. And the problem is, as I say, that the immediate effect of that is going to be to create a little bit more demand, or to forestall any reduction in demand. And that's simply and we saw this in the UK in March when there was a tax cut here, that the tax cut was passed through, but almost immediately the prices kept rising because of the underlying pressures in the market.
Right.
And perhaps governments need to look at a more targeted set of help.
Well, Julian Lee, thanks for the brief this morning on an eventful week for oil. Brent crude right now, $115.87, up $1.74. West Texas, $112 a barrel. Still not used to those prices. It's time for the Abramowitz brief. We do a Abramo brief on corporate markets, IG, and high yield. Lisa, I went back to the BAA industrial to the 10-year, which is what fossils used to look at, and it's very spiky, like there was a little bit of angst and we've de-angst. Why did we de-angst?
This is technical analysis. Yeah, exactly. And whenever you say Brahma brief, I feel like I should do jazz hands. We did see a little bit of a bid to the tape, and this comes as Bank of America came out last weekend and said that buy junk because it's going to be ready for a violent rally. And how much do people take a look at yields, 8.5% yields average for junk bonds, and take a look at the 5% yields that they were a couple years ago.
What's the default risk in recession? Come on.
Okay.
Give me your inner Marty Fritzen right now.
What is this recession going to look like? How long is it? How deep is it? Because the parameters of the ranges of what the losses could be are dramatic. If it's a short-lived recession, a lot of these companies have already baked in all of the financing they need over the next 3 years. They could ride it out, right? If not, you have a real problem, because you have companies that have financed themselves on 4% coupons that are looking suddenly at 7-8% coupons. This is not a sustainable financing mechanism, and that's why you've got such a wide divergence of views.
Lisa Abramowitz and Kaylee Lyons with us. John Farrell,
incredible.
Where did Farrell go? I mean,
he went to Capri.
He goes there a lot.
He goes there all the time.
Wasn't he there last week?
Yeah, he goes to Capri. We all should be so lucky.
It's like speechless. Oh, I know. It's that one with a view. Stay with us. Futures up 68 points. Good morning. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This entire problem with inflation and what may or may not be a looming recession is a self-inflicted wound.
Really what the Fed should be saying is we're not targeting 2% inflation because 2% inflation is in a normal environment.
What they laid out in their projections was essentially the absolutely perfect soft landing scenario.
Obviously, a recession will happen at some point.
If you think that we have a recession in 6 to 9 months, the downside from here is substantial.
This is